Okay, welcome to Best Choice Software Advanced Training. I'm Stan, and Gary is here also. And we're calling this Beyond the Basics because we've trained I don't know how many hundreds of people in the basic use of Best Choice. And we've gotten tons of requests for training beyond just the basics. And so this class, I would say, probably has been a year in the making. We've talked about it and gone back and forth and tried to come up with some kind of format that we could do in a timely fashion. But there's so many different areas to cover. We never could figure out how to pack it all into one class. And so we've picked a couple of different scenarios here today, or topics, I should say, that we're going to cover. I'm basically going to be covering the best choice tips and tricks, so to speak, and then Gary's got a little more of an orderly presentation he's going to do on helping you pick trades, how to know when to get in, how to know when to get out, using some technical indicators and so forth. So before we get going, we have to share our friendly FINRA disclosure. There's no need to read everything. Basically, it says trading in the market is risk, and you should know that if you're trading in the market. The main thing is we're not brokers, guys. We're not here to give you trades. We're not here to recommend stocks to buy next week. We're here to show you how to use the software and how to time your trades, but it's up to you to pick what you want to trade. So the main part of this whole disclosure is Best Choice Software, its instructors or mentors may not provide trading or other advice regarding the purchase or sale of any futures, options, or other financial products or services. I've just seen it happen too many times that people get in the trap of, oh, let's look at this trade, and then you may not be picking trades that fit your risk tolerance or fit your money management style. So everyone will have a different type of trading. So you need to learn to use the software so you can pick the trades that fit your style. And that's pretty much what we're going to be doing here, is teaching you the software. Now, we will be talking about specific stocks, obviously, and looking at specific charts. My big warning is don't start writing these down, because a lot of times, I don't know about you, Gary, but I will pick several different charts from different stocks to show examples of what you want to look for when you're looking for a setup, for instance. And that doesn't necessarily mean that everything I'm looking at is a good trade for one reason or another. So get the information today on using the software. Don't focus on whatever particular stocks we may be looking at to show you examples. Here are the topics that I'm going to be covering. I'm going to go through several various features in Best Choice that you may not know about, little tips and tricks on things you can do to manipulate data, how you can manage your user list and so forth. I'm going to show you how to manipulate the raw data to do some back testing, and I'll explain what that means when we get into it. I'm going to go through a little bit about working with user lists, how to combine them, intersect them, how to build user lists. I'm going to show you how to create a list of actual trades versus creating user lists of stocks. When you find a good trade that's coming up in the next few weeks, I'll show you how to save that actual trade into a list. And then finally, I'm going to spend quite a bit of time on a new feature that we have in Best Choice, which is importing stocks from another source. This has been extremely valuable during these earning seasons, the first two earnings of the year, bringing in the list of stocks that all have earnings coming up in the next week, for instance, and then running them through the Cycle Wizard to find out which ones of those have seasonal moves. So I'm going to spend quite a bit of time on that, and then we'll take our short break after I'm finished. And when we come back from break, Gary is going to cover hunting the trade. We're going to be hunters today. And the first thing he's going to talk about is stalking the trade. He's going to show you the setups that he likes. He's going to show you some of his favorite searches with the search wizard. And then pulling the trigger, he's going to go into some technical indicators and some things that he looks for, moving average, crossovers, whatever. We're going to keep that pretty simple for those people who may not be real familiar with technical indicators. It's basically going to be an introductory lesson on indicators. And then managing the trade, how long do I stay in, what do I watch for to get ready to get out, and then finally going in for the kill, when to exit the trade. Anything else, Gary, that I didn't get on your list here?
No, sounds good. Sounds good.
All right, all right. You can go ahead.
I love the hunting the trade that follows through with the king and the queen.
Yeah. All right, let me switch programs here. All right. Well, as I said, I'm going to be going through various different areas in best choice that you may not be aware of. So I tried to put this in some kind of order because it is going to kind of hop around here. But what I thought I would do is just sort of go in the order of the icons up here and show you the little areas that can help you find better trades or save better lists of trades and so forth. So the first one I want to start with are the program settings. Now there were two things in here I want to show you. We're going to click on program settings. One thing that I keep checkmarked on this is show today's prices on short-term chart, and I'll show you what that does in a moment, but you may want to go into your program settings when this is over and put a check mark next to that. And the other thing that I'm going to talk about that you set in the program settings is this new feature, option extensions. Now this is a feature on the options targets that we typically use for leaps when we're looking to buy leaps. But with version 4.7, when that came out, the programmers put in this ability to change how we look at that chart. And so let's go ahead and start with that. Now typically when we've got a stock, and I had one picked out. Again, guys, I picked these symbols because they had charts that I wanted to show you, not because the trades that are coming up, all right? So all of you who are scribbling VRTX right now, just cross it off your list because I didn't pick this because it's a good trade. All right, now typically when if we were trading leaps originally, and we're talking about this icon just to the left of the option chain up here, the show long-term option targets. This was originally built so that if we are looking at leaps, say we wanted to buy a January 2012 leap on something, the first thing we would have done was pull up a 2-year, 5-year chart. And then when we click on show targets, and this is not the same as the option show targets, what this does is projects the price movement on a linear scale into the future. And we've always taught that you would use this to help you set a strike price for a leap, something that's 1.5 years away. Well, what the programmers did with 4.7, I'm going to go back to program settings here, is they gave us the ability to determine how far out in the future we want to project that price movement. So if you drop the first box down here, you see you've got 3 choices: none, minimum, and forced. And I'm going to talk about the forced. And then you can select your time limit. You can do 1 month, 2 months, 3 months, 6 months, a year, or 2 years, which is what it originally was set up for. Well, I'm going to select 3 months. Now, since I've made changes, I need to remember to click Save Program Options here. Okay, and I'm going to close that out. Now, let's say I want to look at, well, for instance, if I were looking at a 6-month chart on this, and let's say that the seasonal, and I haven't even looked at the seasonal chart on this, so I don't know what this is supposed to do coming up. But let's just say that seasonally, the Cycle Wizard picked this out as a good trade for June, and we see the price, or for the end of May, and we see the price down here, and it looks good. we can now project this out. I would usually pull this back to a 1 year. And now when we hit our extension, it's not going to take us out to 2012. It's only going to take us out in 3 months because we forced this chart to only go out 3 months. And so here's our next 3 expirations. This would be the May expiration, the June, and I assume that would probably be July. That looks pretty even. So as I said, this is a brand new feature. I've played around with it a little bit, but I think this is really going to help be able to set strike prices, especially, turn this off, especially when you have a seasonal that looks like it goes longer than the current month. If you've got something, a lot of the energy stuff, I know Gary's got a couple examples he's going to use today, run from the end of March all the way to the 1st of June or even into July. They seem to have a longer run. And so if we're looking for that strike price that may be the 2nd or 3rd month out, I think that these forced extensions are going to help us determine a strike price. Because normally if we're looking for the current month, the front month, we would just use 3-line charts to help us set a strike price. But if I'm looking for July, I may want to project this on out and look out here in July and see where that price projection might be for July, and probably set a strike price somewhere around the middle band for that time period. So probably, 44, 45 right in here. So play with that, and if you guys figure any cool things out, a lot of times we build these new features into the software, and we have a particular purpose when we build it, but with thousands and thousands of people using the software, we get a lot of good ideas that we never even thought of. So I'd like everyone to kind of play with that forced extensions, and again, it's in your program settings, change it to forced, and then pick your time frame. You could do a 6-month if you wanted to go out a little further, 3 months, whatever. All right, the other thing I talked about in program settings is this show today's price on short-term chart. Now, let me show you what that does. Close this out. And pull this to us. Now, this is not going to work today because the market's not open. But let's say that we had downloaded our data last night, and we're looking at our charts the next day. Typically, we're not going to get that day's price data until after 6:30 Eastern, right, when we run the green telephone. But if you're in the middle of a trade, for instance, and of course, you're maybe looking at your TOS charts or wherever you look at your other broker's charts for up-to-date information, but best choice is an end-of-day system. There is sort of a little cheat that you can do here, which is once you have selected that option in program settings, all you have to do is click on the candle charts, which is also the short-term chart. And when you do that, it will automatically pull in whatever the current day is for that price movement. It will give you a candle here for the current day. Now, if the market were open today, then you would have seen a candle pop up, but my latest data would have been the 14th. Now, if you don't see the candle, this little R button also does the same thing, but I never have to use that anymore because if you set that in your program settings, it will automatically pop up the candle. Then what you can do is flip back over to your 3-line chart, and the current day will now show as a bar on your 3-line chart. It's kind of a little secret thing we had in there. Okay, let's move on to the Cycle Wizards. Well, one other thing on reindexing before I move on. Gary's going to be using some of the surge conditions later on. And so I told him I would cover this part of it. There were I think about 6 new conditions when 4.6 came out that the program has added to the short-term conditions. Now, up until that point, we always told people short-term conditions are only for the candlestick chart. They're not going to help you with your options. But now there are 4 or 6, I think there's 6, that were put in for options trading. Gary's going to be talking about 2 of these today when he talks about his favorite searches. One of them is number of extreme crossings, and the other one is velocity changes / extreme crossings. Now, what these do is they search the 3-line chart, and you can tell it to count how many times the price has gone all the way from the one extreme band to the other. So on this particular chart, we would have 1, 2, 3, 4 extreme crossings on a 6-month chart. So you'll be able to tell the wizard, find me anything that has 4 extreme crossings. But there is no there's no way to pick what time frame when you set this, when you use this. See, you can only pick how many extreme crossings, but does that mean 4 in 6 months, or 4 extreme crossings in a year, or 4 extreme crossings in 2 months? There's no way to pick that time frame when you use this condition. So what you have to do, those 2 conditions, extreme crossings and velocity change, are based on the time period that you reindexed your data for the last time. So if you know you're going to be using those 2 extensions, those 2 conditions, and maybe playing with Gary's favorite searches, what you need to do first is pick the time frame on your reindex that you want those conditions to use. If you want to look for extreme crossings in 6 months, then you need to reindex for 6 months. If you want it to search for the past year, you need to reindex for 1 year. Because whatever you last reindexed, whatever time frame you last reindexed for, is what those conditions are going to use as their time frame. All right. Now let's move on. I wanted to do something real quick on the Cycle Wizard. I've had a couple of people recently that were just getting started. They've been through the basic training, and usually we give them some homework, tell them to come up with 4 or 5 trades, let us look at what they picked to make sure they're reading the charts right and so forth. And I've had a couple of people recently that call me up and say, I don't have any trades. My trades are gone. What happened to my trades? Well, there are a couple of buttons here on the Cycle Wizard. There's a big one at the top that says Delete Saved Cycle Trades, and there's a small delete button here at the bottom. If you ever click this Delete Saved Cycle Trade button at the top, it's going to delete all the trades in all of your lists here. Now, the list will still be there, but there won't be any trades in them. If you're wanting to just delete particular lists along with their trades, you need to go down here to the bottom, open this up, pick a list, and just use this small delete button. And that gets rid of not only all the trades in that list, but it gets rid of that list name. So if you can't figure out where all your trades went that you spent 2 hours finding last week, you've probably hit this big Delete Saved Cycle Trades button, and you wiped out all of your lists. Okay, I want to get into a little bit on the back testing. Now, I call this back testing. I don't know if it's true back testing or not, but you may have looked at your view data. This is next to the puzzle piece button. Okay. This is all your raw data. Every day that you do a download, it brings in the open, high, low, close volume, and any earnings data that is available for that particular stock on that day. And this is the data all the way for the whole 10 years of whatever you're looking at. And not many people know that there are things you can do with this data. For instance, I had a fellow call me or email me last week, and after last Thursday's 1,000-point drop, he said that he was getting some bad data on QID. And typically when I look at a chart like that, I'm teaching people the basic training. I tell them, if you ever get a chart that has a bar that goes all the way from the top to the bottom, it's probably bad data. What you need to do is use your puzzle piece, re-download the data for that one stock, and it should change the chart. Well, it changed a little bit, but I still have that huge bar. Well, this was last Thursday. So what do I do? Because you see how it's skewing my price movement? It's all mushed up here just because of this one big bar. Well, what I can do is, that was the 6th. I can open up my raw data screen. I can go in here and click on the 6th, delete that one day, close it, and now look at the difference. Now this works also for entire ranges of dates, not just one specific date. I'll give you an example here. NETL. When I go to this trade, or the dates, the 30th, September 30th, I tried to find a bigger example of this, but this one will work. Now, in case, hopefully all of you have version 4.7 and realize what I just did, because this was a new feature in 4.7 also. Anytime the Cycle Wizard generates trades for you, when you run the Pink Wizard and you look at your trades, those trades are placed under tab 3 in this lower window called Saved Trades. And with version 4.7, all we have to do now is click on the date that we want to look at, and you see that it highlights that trade for us, that exact date. So hopefully all of you already know that. I've covered that in our basic training. But when I'm looking at this trade, of course I'm analyzing it to 6 out of 6. That's good, 100% winner. Average profit of about 10.5%. But when I look at the consistency year over year down here, I see I've got this one big year, 33%. Well, that's going to skew my average higher than it typically would be because of that 1 year anomaly. So if I look at the dates here, the 30th, September 30th to October 21st, open up my raw data, and that was 08. I want to scroll down until I find 2008. See if I can get it all on one screen here. No. And I want to delete this trade out of my data. So I'm going to start with the 21st, move down to September 30th. I'm going to hold my shift button so that it highlights that whole range from the 30th up to the 21st. You see that? And I'm going to use this button, delete range. Close it out. I want to switch charts. Actually, I think I could have just done a different trade. I'm going to go find that trade again, the 21st, the 30th through the 21st, right there. Now, I have nothing for 2008, but what this does, it shows me without that one anomaly year, I'm going to get a more accurate average move here. And so now, without that 1 year, this still looks like a fairly consistent trade. All my years except 04 are right around that 6% average rather than that 10.5% average. So I know that sometimes you've looked at a trade and you see 1 year the stock moved, first IPO year, the stock moved 150%. And it skews your charts, it skews your consistency average, it can skew the trade actually. And so that's a simple way to go in and just take out that one anomaly year or even the one anomaly day like we had last week and give you a better picture of analyzing the trade. Now, all you have to do to get that data back that you deleted is, again, use your puzzle piece, and it will bring in that 2008 October trade. Okay, while we're on the puzzle piece, a couple of cool things. Let me switch charts here. I'm going to go to IBM, grand old company. Sometimes you may want to look at more than 10 years of history. When we download and re-index, typically we're only looking at 10 years, and for the most part, that's really all you need to look at. You know, the way Pete explains it is commodities never change. Wheat's always wheat. Corn is always corn. But these companies like Apple, Microsoft, they evolve over time, and so their stock behavior, their price behavior can evolve also. And so Pete is a smart guy, and he figured out, 10 years is typically enough data to look for seasonality. But occasionally, you may want to look at 15 years, for instance, or you may want to look at all the years. Well, if you'll open up your puzzle piece, you'll see a little button right here that says All Data. When you click on that, it goes back to when the stock started trading, or at least as far back as there are records for downloading. So when you click Start Download now, and this takes a little while, look what happens to your chart. Now that looks like a commodities chart, doesn't it? And you can see over here we've got stock data all the way back to 1970. Now, not very often would you want to look at that much data on an individual stock, but you may want to do 15 years. I'm going to set this back to 10 years. Again, all I have to do is use the puzzle piece, and it brings everything back like it was. But let's say I wanted to look at 12 years of data on this instead of just 10. Well, you can select the specific date that you want to go back to. Let's say we'll go back to May of '98. And we'll do the 15th. Okay, so this might give you a little better indicator over a longer period of time if you're looking at a particular trade and maybe 10 years, and you know the stock's been trading longer than 10 years. Might help you look at a little further into the trade by adding 2 or 3 or 4 or 5 years of data to what your charts are going to see. And okay, I think that's pretty much all the little tips and tricks. I want to get into managing user lists here and then move on to importing. One other little trick I just realized, whenever you're using sort by over here, a lot of people don't realize this. Let's say I've got it sorted by symbol. Well, let's sort it by, this is one of Gary's favorites, extreme percent 6 months. What this is going to do, it's going to show you a list starting with everything that's already at the upper extreme on a 6-month chart. The bottom of the list will be everything that's at the lower extreme. But if I'm looking for calls, I don't want to have to constantly be moving my list down as I move from stock to stock. So if you will open your sort list again, click on the very same sort condition, extreme 6 months, it turns your list upside down. So now all my lower extremes are at the top and my high extremes are at the bottom. There's just a lot of these little things like this that we use every day, but we don't always think to show you. All right, user list management. Well, of course, you know we have our user list manager here where you can delete lists or build your own list. This is also where we can import, export, merge, intersect. These are all pretty new features in 4.6 and 4.7. But one of the things that I started doing this week, because we're towards, we're in the last half of May, and whenever you search for a trade, it's going to identify the month of that trade by when the trade starts. But a lot of times the trade may run over into the following month. And then the Cycle Wizard may also find that same trade starting at the first of the next month and running further into the month. In other words, it may be one trade that's broken up into two. And so what I did to set this up before we started today is I ran, this little control thing keeps getting in the way. I just ran a basic search using basic 4 parameters. I had about 1,000 stocks. And then I picked out my May and June calls. Okay, so here's my May. And then here's my June. Well, some of these trades may start late in May and run on into June. And then may also show a trade that starts in June and runs further into the month of June. So what I want to do is I want to find those ones that may span the change of the month. So what I did, use my user list manager. Now I'm going to intersect these lists. In other words, I'm going to pick both of those lists, open this up. We're going to create a new name for it. We'll just call it May to June. Because I want to identify quickly those stocks that may appear on both lists because they're the same trade broken up into 2 different starting months. So I'm going to pick my May calls and my June calls, and I'm going to intersect those lists. So it's only going to make a new list of the stocks that appear on both May and June. And there were 12 of them. So now I can go open up. Oh, got to close that first. May to June. And I could start looking at the seasonal charts on these very quickly. And you see here's one that may start right here and move on into June. So the Cycle Wizard may have found a 14-day trade here and another 14-day trade here. But it could also be, you could combine those 2 into one trade. There's another one. Looks like it starts in May. It may end right here, start again here, but I could maybe make that whole trade and just buy a June option on this one. Now where this is going to really be helpful is one like this that looks like it runs all the way into July or August. Because the Cycle Wizard may try to break this up into 2 or 3 smaller trades because it's only looking at the starting date, and if you've got a 14 to 45 day or even a 14 to 28 day, then it's not going to be looking beyond that 28-day period, but the actual move may last longer. So by intersecting my May and June lists, I can look for trades that might actually start in 1 month but run for 2 or 3 months, or at least into the next month. And you can always go down here and open up your saved trade window. And you see here I've got a trade that started on the 29th of May and run to the 14th of June. But I've also got a trade that starts on the 7th to the 21st. So why wouldn't I just consider this a trade from the 29th to the 21st of June? Consider it almost a 30-day trade rather than 2 14-day trades. Or I could do it both ways. I could buy 2 short options and 1 2-month option. So that's intersecting. Merging, I like to use merge if I've created different user lists that I want to combine. For instance, I may have created a high extremes list, everything that's at a high extreme, and I may also have an earnings list. And I may want to merge those 2. These are all earnings that are coming out, say, next month, and then also merge those with the ones that are high extreme, or I could intersect that list and find only the earnings that are already at high extremes. But there may be some good trades in here that there aren't earnings on that I wouldn't see here, and vice versa. So that would be a good example of when you'd want to use the merge feature. Okay, I don't want to get into Gary's time here, so I'm going to jump on to importing because this is going to take a little while. This is a brand new feature in 4.7, and I know I covered it in one of my webinars, but not everyone got to take advantage of that. So I'm going to go through it again here because I think it's a critical new feature. If you open up your list manager, you see we've got an export button here and an import button down here. And what these allow us to do, we had a lot of requests always for being able to search in particular sectors. And because the data that we download only has open, high, low, close, and earnings, and there's really not any sector designation to download into the software, Best Choice never had the ability to look at individual sectors like retail or energy or whatever. So we asked the programmers, we actually asked them a lot, please, please, please put this in. And they finally got it in 4.7, the ability to import a list of stocks from a different source. So you may have a different software program or a favorite website that you like to look at your sectors, or you can screen for different maybe technical indicators, overbought, oversold, that kind of thing. But in the past, in order to look at a specific group of stocks that we had no way of grouping in Best Choice, you had to manually go in and add the stock symbols one at a time to build your own user list. Well, you no longer have to do that with this import feature. And I'm going to use one of my favorite websites here, which is called finviz.com. You don't have to use this one. You know, if you've got a favorite, anything that allows you to export in an Excel spreadsheet format or a text format, you can import that into Best Choice. But FinViz is pretty simple. It's a great website. It's got tons of information here. I haven't even been through everything because typically I'm just using this screener right here. So we're going to go to the screener. I'm going to actually walk you through an example of this. So you can see I've got 3 different areas that I can screen stocks on. I've got descriptive, which are, you know, what exchange is it on, what sector. There's a sector and industry section. Now, if they don't have a sector name that you're familiar with or an industry name that you're familiar with, what I recommend is just type in any symbol here, and when it comes up, it will show you how they designate the sector and industry. And so if you're looking, for instance, for, let's see, auto parts, well, you may not know that they call that the services sector, okay? But you know one of the auto parts companies, and you want to look at all auto parts stocks. Now you know what sector and industry to screen, and you can just pick services, and then auto parts stores or auto parts wholesale. There's several different ones, you see. There we go. We have all the auto parts stores. And then, of course, there's fundamental information. This is going to be your PE ratios, sales growth, that sort of information. And then you have technical, which are going to be things like moving averages, volatility. I think they have beta on here. A lot of people like to use beta, average true range. So this is a very good site. They've got a lot of different options that you can screen your stocks with and then bring them into Best Choice. Now, it's very simple to set up our basic 4, just like we would do with the search wizard. We go over here and we pick price, and right now we're running maybe $20 or $30 and above. Right there, over $30. Here's optionable. Any exchange, that's our third condition, and where's the other one? Volume right here. And we typically do over 500,000, or some people like to go on up to 1 million. So there's our basic force surge that we would normally use in best choice. And I'll tell you one of my favorite other conditions that I've been using a lot since the end of January, February, is this earnings date. And we can screen out stocks that have earnings reports coming out this week, next week, this month. And you can even save these. You see I've got one for earnings next week. I've even got one for earnings tomorrow. So let's go ahead and screen this out. Let's do, let's just do that auto parts. That was a good one. Let's look at wholesalers. Nope, only one of those.
Yeah, man.
Hey, Gary, you're not muted. Okay, this will be good because it's a short list. Now, before you import this list, you have to take off anything that is not a stock symbol off of this list. If I just export this as it is, it's going to export it in an Excel spreadsheet format, and it's going to have column headers for company, sector, industry, country. Best Choice won't recognize these column headers. The only thing Best Choice is going to recognize are the stock symbols. So in order to get rid of these, what we need to do is go up here to, I think it's filters. Where was it? Oh, I'm sorry. No, we go to custom. That's why I can't see the button. Right here in the middle, it says custom. Now on custom, you have all the column headers that you want to show right up here. Under settings, here's your column headers. And so we can pick, all we want to pick is the ticker symbol, okay? We want to take off anything else, industry, sector, company, uncheck all of those. And so if you look here at the bottom, now my list only has the stock symbol. And we're going to use right here is where we export it. Click on that export. We're going to save that. And we'll just call it auto. Now, before we import it, there's one other step we have to do. I'm going to open that file. And I told you Best Choice won't recognize anything if it's not a stock symbol. Well, you see it still left that column header here on my spreadsheet. So I just need to delete that whole row so that all I have on my list are my stock symbols. Resave it. Now, when I go into Best Choice, open up my list manager. I want to create a new list to bring those into. Call it auto. I have to select that list. Now I do import. There's my auto. And there's my three symbols. Now I can take that user list and I can run it through my search wizard. And normally you're going to have more than 3 stocks. You know, if you're using, for instance, earnings coming out next week, you may have 200 or 300 companies that are reporting earnings next week. So this is very much a time saver. You can now run those 200 or 300 companies with earnings coming out through your cycle wizard and find the ones that seasonally tend to move when their earnings are coming out. So again, you have to have some place to export out of, another website or software or something else that will allow you to do search and export that list and then import it into Best Choice. And this has been a huge time saver the last few months, especially on these earnings plays, being able to only run through the cycle wizard the companies that have earnings coming out in the next few weeks or in the next month, rather than looking at all the seasonal charts and looking to see which ones are moving around the green dots. Okay, I wanted to keep my part a little tight, and I'm getting the signal from Gary that move on a little bit. So, Gary, do you want to go ahead and take a break now, or?
No, just I'm noticing from a user standpoint, the rest of the people, there's a slight delay in transmission from one screen to the other, so give it a chance to catch up.
Am I talking ahead of what you're seeing?
Yeah, just a little,
okay.
About 5 seconds, that's it.
Okay.
You can continue. You can continue.
Well, that was mostly what I wanted to cover. I was going to do the What If PT show targets, but I think you said that would work better with your part.
Yeah.
And just explaining explaining how those all 3 work together. So I'll just quickly run through a quick review, and then maybe we can maybe we can get in a little longer than a 5-minute break.
All right. You want to throw a question out to the audience and see if that's good?
I really don't want to get into that, especially since we're recording it.
All right, sounds good.
Because that'll drag on forever. Again, if you have questions during the presentation, just type them in the question box, because I have a way to save all of those, and I can print them out, and then we can post questions and answers on the website later. One thing I did want to say before I do this review, one of the biggest mistakes that I see, especially people who are just getting started trading or maybe haven't been trading in the market for a while, one of the biggest mistakes I see them make is in money management. And Gary, I'd like you to talk about that a little bit from your perspective when you get into your part. But the biggest frustration I have is when someone's getting started with Best Choice and they get into a few trades and they don't work out for them, and they tell me they don't think they're using the software right, or they didn't learn it. And I ask them to tell me the process that they went through. I find out that they only did one trade, or one trade at a time. I did one in February, and I did one in March. Whatever your risk tolerance, whatever your account size, you need to have some kind of money management strategy, because that's the biggest detriment that I see to people getting started, is they don't spread their risk out, or they risk too much of their portfolio. Now, personally, my risk tolerance is not very high. I'm a pretty conservative trader, as Gary would tell you. And my money management strategy for me is I don't like to have more than 25–30% of my money in the market at one time. Now, I think Gary is willing to risk a little more of his. He might go up 50% or something, and he can talk about that during his segment. But out of that 25 or 30% that I'm going to put in the market, I'm not going to put it all in one trade. I want to spread that out over 4 or 5 trades, or if I can, get into 10 trades if possible. Because by doing that, you're spreading out your risk. And even if you pick 10 trades that were 100% winners, 10 out of 10, you never know what the market's going to throw at you, like last Thursday. or some fundamental information. The company gets indicted, or, so even though the trade happened 10 out of 10 years, something in the news or something in the world can cause it not to happen this year. But if you're spread out over several different trades and you have no more than, a certain percentage, mine is, I like to have like 5% in each trade. So if I have 5 trades, that's 25% of my portfolio. I've got 75% of my money sitting in cash. If I lost all 5 of those trades, which is unlikely, but if all 5 of them went south, I still have 75% of my money to keep trading with. And so that's the biggest mistake I see people when they're first getting started, especially in trading, is they just do one trade and they put too much money in it, and if it doesn't work out, they think that they're not doing it right, or they're not using the software right. All right, let me do a quick review. We started with program options and program settings, and the 2 areas that I pointed out was show today's price on short-term chart. That way when you click the candlestick during market hours, it will add a candle for that particular day, so you don't have to wait until 6:30 to see where it's lining up on the chart. And the other one was this option extensions, and I set mine on forced and 3 months. And remember, that helped us move this chart out in the future, but only by 3 months, because we don't need, if we're looking just to, let's say, buy a July option, we don't need to look at 2012. And then the next thing, I gave you a little bit of a warning about deleting your save cycle trades. If you use this button, it's going to wipe everything out, but it's going to leave these lists here, so you'll think you still have a list, and when you open it up, there's nothing there. In order to get rid of these individual lists, you use the lower window down here. And then the next thing, there were those 2 conditions in the search wizard that depend on the time frame that you reindex for. Number of extreme crossings and velocity changes / extreme crossings. Now, I didn't explain what these are because Gary's going to be using these in some of his favorite searches in the next part. But before you use either one of these, you need to reindex for the time period that you want those to look at. 3 months, 6 months, 1 year. I'm sorry, I'm probably flipping through these too quick. And run your reindex, and then go do your search in the search wizard for whichever condition you wanted to use, extreme crossing or velocity change. And we spent a little bit of time on the back testing, showing you how to delete a range of data or even one day if we had that one anomaly day, and if it's messing up a lot of your charts on the 6th, then just delete the 6th out, and that will fix your chart so you can look at it and get the data back. All you do is hit the button, puzzle piece, start download. Then we also showed you how to collect all the data. If you want more than 10 years of data, you can collect all the data that's available on that stock, or you can go back for a specific time frame here using the little calendar. And then user list management, and again, I only showed you one example of like intersecting the May and June to find those that start moving in May but may continue on in June, but the Cycle Wizard broke them up into 2. But I try to find a lot of ways to use these merge and intersect buttons to create sort of conglomerate lists of different searches that I've done. So play around with these buttons. These can really kind of help you save time and find trades that maybe you'd have to do 2 different types of searches. Maybe you did an extreme crossing search and a volatility search, a separate volatility search. You may want to merge those 2 lists together and look at all those stocks. So this is an area that we're using a lot more than we used to with the addition of the merge, intersect, and the import. And if you have, say, another software, I know some people use some technical analysis software. You could run through the Cycle Wizard, get your list of trades for May, and export those into your technical analysis software that will do a detailed technical analysis on those. But Best Choice is always your starting point. Best Choice is the software that's telling you which stocks to look at. I mean, that's the power of Best Choice, is we know what to be looking at. You know, you can take all the classes you want on technical indicators, and I've had people tell me this. I took a weekend class and learned everything there is to know about technical indicators. And when I got home, I had all this knowledge, and I didn't know where to start. Well, that's what Best Choice is for. That's your tool for knowing where to start, whatever your trading style is. When you're technical or you're fundamental, Best Choice is your starting point. It tells you what you should be paying attention to this month. And then finally, and again, this is going to be recorded, so I did flip through it pretty quick, but importing that list of stocks. And again, I like that FinViz website, but whatever you have that you use for screening outside of Best Choice, as long as it has an export feature where you can export either in, it's a CSV format, .csv, which is Excel spreadsheet, or a TXT text file. You can, as long as it can export in those extensions, you can import it into Best Choice. And this has, again, been a huge time saver. 4.7 has only been out for a little over a month, and I've used this import feature over and over and over since this came out. And then I got on my soapbox about money management. So enough said. I would like Gary to talk a little bit about his money management style. Okay, well, I think Gary's probably going to be able to take up the next 2 hours just with his material, and when he throws in his gift for gab, I'm going to leave him a little more time than I wanted to take. So I think we'll take a 5-minute break right now, and I'm going to put up a short break screen here, and when you see this screen change and says we're going to start in 1 minute, that means we're going to start in 1 minute. So this is bathroom break time or get a drink time, and we'll be back in about in 5 minutes. Let's call it 10 after the hour here. Okay, guys, this is our 1-minute warning. We're going to start up here in one more minute. Okay, let's go ahead and get started and let Gary get on his. Gary, are you back on? All right, while we're waiting for Gary to get back, there was one thing I forgot to cover that I wanted to show you today. Again, one of my favorite cool features in Best Choice. So I'm going to go ahead and add this to my time here, and then we'll get Gary on the line. I'll give everybody a couple seconds to scramble back to their computer. Okay, the other thing that I forgot to cover was saving trades. I talked a lot about user lists, and a user list is just a list of stocks. But usually the only time you can see your trades is when you view the results here in cycle trades of whatever the wizard came up with. Well, as you go through your list for May, for instance, May or June, let's say you analyze these trades. Out of 17 repeating moves, you might find 5 that you really like based on analyzing both the 3-line and the seasonal chart. And if you've been through our basic training, you know what I'm talking about when I say analyzing the charts. So you've got your 5 trades picked out, and you could put those 5 stocks in a separate user list and say these are my 5 picks for May, but then you've got to go search for those trades again. Well, there is a way to actually save a group of trades, not just the group of stocks. Let's go over here to tab 3. And let's say we're analyzing this 529 to 614 trade. We really like it. It's 5 out of 5. Pretty consistent here. We only have 1 year that it wasn't over 10% in double digits. So let's say we really like this trade, and this is the exact trade that we want to put on our watch list. Not just the stock, but we want that exact trade saved into a list. Well, right up here, it's barely noticeable. There's a little save button. If you click on this button while that trade is highlighted, it brings up a dialog box. And if you look at this list, these are all of my cycle lists. These were the lists that were generated from the cycle wizard when I ran it. Well, this gives me the ability to create my own cycle trade list. So let's say that this was, what is this? We'll just call it a June trade because it starts right at the end of May. So let's say these are my June picks. These are the actual trades that I analyzed the charts, and this is the trade I'm going to be watching for. So we type in a name for the list, my June picks. We're going to save that trade into that list. Now, when I want to go look at my actual trades that I picked out for the next month, I open up my cycle trade window, and lo and behold, look here, my June picks. And there's May. It's actually a May trade. And so I can actually build my own list of trades, not just a user list of the stocks that had trades on them, but this is my own personalized list of the actual trades after analyzing the charts that I picked out that I'm going to be watching when to enter and when they start to move. So that was the other feature that not a lot of people know about, but once you have identified a trade, we'll go in here and pick another one. That one showed up in May, so we should pick a May. Here's the 21st to the 30th. Well, let's pick this 18th to the, no, it doesn't matter. We'll pick that one. Now, that's not a good-looking trade, but let's pretend that it was 100% winner and so forth. I want to save that to my June list. I just find the list now because I've already named it and put it in my June picks. And now I've got both trades right there. All right, Gary, are you back?
Yepper depper.
Okay.
Can you hear me okay?
Get closer to your microphone. All right, I'm going to switch this over to Gary, and he is going to take it from here. I think you'll have to show your screen, Gary.
Yeah.
Do show screen. Cool.
All righty.
All right, I'm taking notes.
Take notes. I hope you take speed writing here. All right, welcome to the second half, everybody. Thank you for taking the time Saturday afternoon. I have a very chronological process of what I go through, and also what I teach everybody, which I think a lot of people appreciate, a very systematic approach to how to use this software. I'm kind of going to go a little bit through that without going and belaboring with a lot of the minutia that's in between. But I think it'll be helpful for you guys to kind of see what I do and what I go through in the process of evaluating from a user list all the way to actually selecting a trade, analyzing the trade, and then going to my triggers to refine the entrance. I want to start, however, with sharing with you my basically my 4 or 5 basic user lists that I love that create phenomenal trades. I'm always using these and always teaching these. Everybody's aware of the basic 4, I think, that both Stan and I always teach. They're always located under the B's, list by exchange. I like to leave the indexes and ETFs up. And out of that universe, since we like to trade options available, and we want to add volume, we need volume for liquidity. And I'm always bringing it up to at least 500,000. There's really 500,000 shares per day if you break it down to the ridiculous of 6.5 hours of trading time during the day. It's really only about 1,000 shares per minute. And, since one option contract controls 100 shares, if you're trading 10 cars wide or 10 contracts wide, you better have at least that much liquidity to be able to get in and out. Current stock price, these are the basic 4, list by exchange, options available, volume of 500,000 or greater. I like to bring my current stock price up to $30. Some people like to use it a little bit more. I've played with all sorts of ranges, 10 to 20. I've even used Sonny's one of 0 to 5 and then used the Cycle Wizard to bring up the return in 100%. But I've found $30 or higher, all the way up to Berkshire Hathaway, to really find those stocks that really move. And remember, the claim to fame with our software is we like to find stocks that have big movement in a short period of time, looking for cheap, out-of-the-money options with good historical volatility on the underlying security. So that kind of hones the universe down to 780. Well, my favorite condition to add to the basic four is volatility. Now remember, whenever there is a dollar sign after a particular condition, it's only applicable to trading the stock. When you see the word percent after a condition, that is pertinent to trading the derivative, the option on the stock. My favorite condition is volatility percent 6 months. When you add that condition, this bar again appears on the right, and the volatility percent is on the left. Now, a lot of people ask me, where do you bring the bar up to? Where is the optimum spot? Well, there isn't really any specific place because it all really depends on when you download and reindex, because all of this data will change based on end-of-day price and earnings data. What I've been doing lately, at least in the last month or so, is bringing this bar approximately up to where it stops around the 50% rank, thereabouts. Seems to hone down the universe to about 400 to 450 stocks. And after running hundreds and hundreds of user lists, training hundreds of people, I found that to be an optimum number of stocks to start with. And kind of the way the theme of this second half is that we're hunting for stocks. I have some stupid analogies that I use for the search wizard and the cycle wizard and the cycle trades, the three icons that we use. I call this one the king because it kind of looks blue, and this one's the queen because it's kind of pink, and this one kind of looks like a menu. Here's my stupid analogy, guys. Maybe you'll like it. In the old days, us men used to go out in the woods and hunt, and then we would kill the food and we'd bring it back to the wives, to the queen. And what did they do with that? Well, they cooked it. They prepared it. They created a meal. And then this icon, the cycle trades, kind of looks like a menu, and that's what we're going to eat. So continuing with that theme, I want to hone down this universe to about 400, 450 stocks because I found that to be kind of like just the right sweet spot. Not too many, not too little. Because once we hand this off to the queen, the cycle wizard, she peels, slices, and dices it with her specific recipe. It seems to give enough trades to look at on a monthly basis, not too little and not too many. So adding that condition, bringing this bar approximately up to the 50% range, seems to get that magic number. Well, it's 462 right now. That's good enough right there. That is what this condition is doing, guys, is looking back over the last 6 months and finding stocks that have this kind of volatility. They're just screaming up, screaming down, up and down, up and down. This is on an energy stock called BTU. And that's really what we want. In trading options, if this thing was oversold here and this was a seasonal move, you want that stock to go from one extreme to the other and not just meander and go sideways before it gets up, because I like to buy front month. I like to buy that spot month. I like to get in and out of trades as quick as possible. I generally do not stay in trades long. And I just want to have it find me stocks that just explode from one extreme to the other in a short period of time. So adding this condition will find those stocks that make these kind of volatile moves and also weed out the stocks that do not have wide bands. And we want wide bands because that's indicative of volatility. And I'm always looking at the low versus the high. That's spread between the two. And when you look at that, that's about a $6 spread. Well, $6 is a percentage of a stock that closed at $42. That's like 13, 14, 15%. The more the merrier. I will not trade stocks where these bands are less than 10%. Because the way Pete taught us is when a stock is oversold, that sweet spot is between the 50 and 90% of price movement, or 70%. In other words, between the mid and the high, right in here, if there's a strike price available at that. If the bands are too narrow and the stock is oversold, you're ending up forced to being either at the money, in the money, or you have to go outside of the bands in order to pick your strike price. And I never do. I never go outside of the bands except for a couple of occasions that I'll demonstrate here in a second. So that's a real good number. Now, of course, we're always saving these conditions to the wizard's memory. You always want to save it here. I'm always dating my lists. I like to use little shortcuts like B4 for basic 4. I'm always putting my stock price that I start with, $31. This is just my technique, so it can trigger my memory in the future of what the heck were the conditions I was using to create that list. So this is the basic 4, and then I'm simply adding any other condition that I'm adding to the basic 4, and this is my favorite condition. I mean, the stocks this particular condition set will find once it's run through the Cycle Wizard is phenomenal. I mean, they're really good, big moving stocks. So I'll just abbreviate this volatility percent 6 months, and then I'm adding in whatever that volatility is that I brought it up to. A little shortcut because I like to standardize all my list names. I don't like to type a lot. I don't like to make mistakes. This right now is saving it to the wizard's memory. I simply highlight that, Control V. I like to just right-click, copy. Now I've saved it to the wizard's memory. Now I'm saving it to a user list. Right-click, paste. Now I don't have to retype that. It standardized my list names, and I haven't made a mistake. So that's a fantastic condition that I love. The next condition. Again, these next two that I'm going to show you are simply a variance on the volatility percent 6 months that will find other securities that the volatility percent 6 months won't, that are simply looking at the universe of stocks of 780 and weeding it down to the stocks that have good volatility, but using simply a different parameter. Price percent spread weekly. That's another great condition I love to use. Again, guys and gals, my apologies, should be politically correct. No rhyme to reason where I'm bringing this bar up to. The concept is to weed down these that do not have great volatility. This is simply a different condition that will find different securities that the volatility percent 6 months won't. Again, and think about what that condition is doing. Price percent spread. It's looking from 1 week to the other. What is the spread of price from 1 week to the other, Friday close to Friday close? You won't have to bring this up very much to really weed down that universe very quickly. A price percent spread of 2.1% from one Friday close to the Friday close of the next week, owned it down to 477. One more to 2.4% weeds it down to 375. So once again, I'm going to save these condition sets to the wizard's memory. All I have to do is paste because that's still saved in cache. Simply get rid of that. And again, little shortcuts to trigger my memory. Price percent spread week. And then what was that percentage that I used? 2.4%. I'm going to save it to a user list. Right-click, paste, save. That's a fantastic condition. My next favorite one is average weekly percent movement. Again, all of these conditions are under the B's for both. Remember, the short-term conditions are primarily and only for swing trading. The long-term conditions are primarily and only for long-term buy and hold or buying leaps, even though there are some great conditions in there that will find stocks that are screaming. I'll show you one. It's a great condition. I'll also show you one out of the short term. But keep in mind, we primarily and only use both as far as creating condition sets. Okay, average percent weekly. Average weekly percent movement. Again, what is it saying average? It's averaging Monday through Friday, looking at the next week, Monday through Friday, and what is that percent movement? Once again, idea is just to bring this universe down to about that 400, 450 level in that area. This one, as I recall, you have to move up a little bit more. I think I was moving up to about 40%. Yeah, there you go. Again, remember, when you re-index, if you guys are going to try this on Monday, perhaps over the weekend, you'll find these same things. But remember, history never changes. Only the future that changes. So these lists are good. And the stocks they find based on historical movement is fantastic. Again, just a variance on the other two conditions to find volatile stocks. So once again, I'm going to save that to the wizard's memory. Simply get rid of that condition and then make a shortcut to trigger my memory of what was that condition that I used to create that great list. Average weekly percent movement, and I brought it up to 5.54. And I'll highlight, right-click, copy, save, and then I'm saving it to a user's list that the wonderful Queen is going to peel, slice, and dice and find me trades. Okay, the next two, well, the next one is found in the short term. This is a fantastic two combinations of conditions that was an epiphany by Pete, and he told Chris, the head programmer, to create this. And it really makes a lot of sense. If you say, we're always looking for stocks that do this kind of pattern, that have really good volatility moving it up, and we can play that role as long as it's confirmed by seasonality, unless you're losing a lot of other technical indicators. But the tools that are built into Best Choice are phenomenal. We should all take advantage of all of these tools that are here. You'll take the scroll bar and scroll it all the way down. My predecessor and partner, Stan, kind of alluded to this condition. It's a number of extreme crossings. And again, that condition is directly related to how many months you are re-indexing data for. Defaultly, this opens up for 3 months. Most people just simply click it and let it re-index that data. I like to change it to 6 months, because then this condition will look back over the last 6 months. And you're telling the software to find me out of this universe of stocks. Well, let me get rid of that. I have to get rid of that weekly percent move. Out of the 780 stocks, find me stocks that cross its extreme percent of price movement. We're always looking at what extreme percent of price movement is that stock currently at in today's economic climate. How many times is it going from one extreme to the other? In a course of 6 months, as long as you're re-indexing for 6 months. So you may, when you create this list with this condition and the next condition that you're going to add on this, download, re-index, and re-index for 6 months, and then run this condition. Save it in the search wizard, run it through the cycle wizard. You will not need to bring this up more than 2 to 4 clicks. Watch what happens. 1, 2, 3, 4 clicks, it just knocks it down. Really heavy. And that's too little for me. So I'm going to move it down 1 at 561 securities. The next condition I'm going to add to that is velocity changes of extreme crossings. Velocity. What does velocity mean? Velocity is speed. A velocity, again, it starts from 0.0 all the way up to 25, but a velocity of 0.0 means that stock went from one extreme to the other without ever changing direction and price. Oh, isn't that what we want? We want stocks that just close higher, 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 and all the way up to the top, and they just scream up without ever reversing. So a velocity of 0.0 means it's never changed direction of price going from one extreme to the other. And I hope I got this right. I never talked to Chris and Pete before this presentation, but I believe I'm doing this right. Is you're going to want to take this top bar and move it all the way down. So it's got the least number of velocity change going from one extreme to the other. This is a great list, guys. This will find screaming stocks that just go up and down. And that's exactly what we want to do. And these are two conditions that were created in 4.6 to find that. So I want to save that list, again, to the wizard's memory. So I'm going to, again, everything's saved in cache. There's my last list. I simply get rid of that. And number of extreme crossings, well, I like to use X for number of extreme. Again, this little acronym that I'm using for my own edification, at any time in the future, what were the extra conditions I used to the basic 4 to create that list? Well, it was 3. And then I added velocity, change, extreme crossing, and I used 0.01. Velocity change, extreme crossing, 0.01. Okay, highlight that, right-click copy, saving it now to the wizard's memory, save it to a user list, paste, done. Great 2 conditions. All right, I'm going to remove those 2. I'm back to the, again, you guys can set all this up all at once. You don't have to do it again. You don't ever have to leave the king or the search wizard. I say the king again because we're going out and hunting stocks right now. Okay, the last favorite condition I like to use, and it's something I learned from George Lee and Pete, it's under the long-term conditions. You'll take the scroll bar all the way up. Now, before I show these 2 conditions to you, I'm going to close out of this. I'm going to refer to a particular stock, because it'll drive the point home of what these 2 conditions will find. Well, doggone split here on Baidu. Let me get rid of that and those days, and then this will make more sense. This is a 1-year chart of a screaming company that we're all familiar with, Baidu. This is a phenomenal trading stock, guys. If you're not trading this stock, you need to be. George and Scott and I back-tested this for last year. There were actually 4 trades on Baidu that if you started with $10,000 and you made these trades, there was 4 of them. There was, I think, there was one in October. There was another one here in July. There was another one here, and there was another one earlier. $10,000 could have parlayed total long money management. You'd rolled all your principal profit into literally over $1.2 million. It's a great stock. Point I'm making behind this is a screaming stock, everybody. I mean, you know, $229, 719 in 1 year. That's huge, huge growth, guys. So these next 2 conditions will find these kind of stocks that are screaming. I'm going to load one of those conditions I just created. As you see, I create lots of lists. Let's use volatility percent. To get rid of that condition, I am going to add price growth rate for 1 year and earnings growth rate for 1 year. This is a variance on the 2 conditions that Pete taught me when I first came on board. We used 2 years, but the market was different back 2-3 years ago than it is today. You know, the market has rock and rolled from March 9th all the way forward. You know, we had a little bump in the road last Thursday. But these 2 conditions will find stocks that find these kind of stocks that are just screaming upwards. Guys and gals, we just play the role based on seasonality on this. And that's exactly what we want to do. Now, there's a little bit of art to these 2. Meaning, where do you bring the bars up to? Where do you kind of hone it down? Well, I like to start with price growth rate. Start to kind of weed this universe down, maybe into the 500s. There. So that's price growth rate of 21.3% over the last year. That's pretty strong. Now we're going to add earnings growth rate. Well, again, this, by the way, these two particular conditions, your universe will not be between 400 and 450. But that's okay, because this is finding great screaming stocks. Just like with number of extreme crossings and velocity change, you know, it can be a list in the 200s, and that's fine as well. Maybe I can bring price growth a little bit down to try to bring that universe up a little bit. Kind of make a balance between these two. And again, it'll vary depending on when you download and reindex. This is a great list, guys, to find strong screaming stocks over a year, just like this Baidu that you play the role. So again, I'm going to save that to the wizard's memory. And then just add those two conditions. Now, I got to shorten this, otherwise the list gets too long. And then the software won't save it. Price growth rate 1 year, and earnings growth rate 1 year. Highlight, copy, save to the wizard's memory. I'm going to save it to a use list. Right-click, paste, save. Those are my 5 favorite conditions. Volatility percent 6 months. Price percent spread weekly. Average weekly percent move. Those are separate conditions that you add to the basic 4. And then under the short-term conditions is number of extreme crossings. Bring it up about 2 to 4. And add in velocity change. And again, that's just a little bit of an art of where you bring that velocity change. Again, you're trying to bring that universe down. Again, that particular list, adding those 2 conditions to the basic 4, you'll probably end up with about 200 to 300 stocks. But that's fine. And last but not least, the one that you're looking at right now, earnings growth rate for 1 year as well as price growth rate for 1 year to find stocks that are simply screaming upwards, and then run it through the cycle wizard to find the great seasonal moves. Okay. So the king went out and killed. The queen is now going to put her little recipe. Again, look at this as a recipe. I hate to do this stupid food analogy. Maybe it's always because I'm hungry during the day. These are very, very powerful conditions that Pete developed. And this wizard is phenomenal, guys. It's something George really, really understood. He understood how to play with these numbers and how creating these numbers, changing one parameter, just like in a recipe, if you change a piece of a recipe, the end result's going to change. It's exactly the same with this. Because of the way the algorithms are written, you have to change these shortest and longest terms in increments of 7. Stan in one of his webinars showed how to create a longer term list. I like to use 2891 to find longer term, and I'll show you why I do that in a second. However, you have to bring the rating down. Remember, the rating is a mathematical formula that Pete developed. Like on Baidu, you know, whenever you snap any place on this chart, defaultly, everything is set up in tab 3 to look for the best rating of the whole zone, meaning where you start and where you finish. It's looking for the best rating. Well, the rating is an ingenious thing that Pete came up with, a mathematical formula. It's the win percentage multiplied by the average profit divided by the number of days. So you have 2 numerators, 1 denominator. So the higher that denominator, it's going to drag that rating down. However, it doesn't mean that it's not still a good trade. And this is going to segue into a particular stock that I want to talk about. It's an energy play that I was telling all my users about that I finally decided to trade this year on some longer-term trades. And I'll go over about 5 trades that I've done here this month and last month. Show you entrance and exits and what I was looking at here in a second. But COP, now I've got all the data up on COP, ConocoPhillips. Again, Stan's already showed you how, defaultly whenever you open up the search or the seasonal chart, it's defaultly set to 10 years of data. But, energy, if you think about it, ConocoPhillips, Chevron, Exxon, British Petroleum, or XLE, which is the spider on energy, really that's commodity. That's a commodity, kind of like wheat or corn, and bushel of wheat's the same today as it was 40 years ago. So is a barrel of oil. The only thing that's changed is supply and demand and price. So, if I snap this area, this ends up being red, and a lot of people go, that's a crappy rating. Well, wait a second. It's a 90% win probability. That's where my eyes are always falling on. I'm always looking, what's my profit on this? What's my consistency in percentage historical movement? Or is there some weird year anomaly? Which kind of segues back into what Stan was showing, how you can kind of remove that year to play it a little bit more conservative. Yeah, did that trade happen, that move happen that year? Yes, it did. But is it skewing what you expect that average percent move to be on the stock? Absolutely. So, it's a crappy rating. Well, because it's 30 days and it's not a lot of profit, it's still a 90% win probability. But if I go to the puzzle piece and I say, wait a second, this is ConocoPhillips. They're in the oil business. Click Start Download. Well, hit All Data, so it takes it back to as far as that security has been publicly traded or data that we have in the database. Click Start Download. And I go to tab 3, because remember, tab 3 is defaultly set, again, to find the best rating of whole zone with a minimum number of days of 14. Well, the way the algorithms are written in the seasonality chart, remember, there's 365 days in a year. It's 52 weekends. There's 9 federal holidays, last count, meaning there's 252 trading days. But when you're looking back into 10 years' worth of history, those holidays and weekends do not necessarily fall on the same day from year to year. So in order to account for that variance, you've got to do things in increments of 7 to be inclusive of a weekend. Well, I've already done this. You change this to 91. And I snap this area from February into June because that's the energy run. It lights up like a red Christmas ball. A lot of people would say that's a bad trade because they're always looking at the rating, which is a 1. But wait a second. My win probability is 92.9%. That's 26 out of 28 years. Holy Toledo. That's a lot of statistics and gives me a lot of confidence to know that's a repeating move. So in February, I could be looking at June expirations. For those of you who do not want to monitor a trade so much and be glued to your screen all day long, you can play a longer-term trade and just wait for the bands on the 3-line chart for the stock to be oversold, get a cheap option. So let's take a look at what was happening around February the 22nd on ConocoPhillips on a 6-month chart. Dates changing down here. Not a bad setup, everybody, huh? It's way oversold. Stocks meander down. Linear regression lines are pointing up. It's got a decent spread between the 10 and 90% of price movement. It's about $6. Again, $6 on a stock that closed at 48 is over 10%. That's again what I look for. There's got to be a 10% spread between these lines. That was a really good setup. So the point I'm making behind this long dissertation is, on certain stocks that the commodity hasn't really changed, you can go to tab 3 and change this in increments of 7 and give you more confidence to go further out into time to buy a further option and not have so much time decay that will erode your profit buying front month. Same thing with CVX. And again, I've already downloaded all the history on this. Again, you can see that composite shoot up from February to June, and we got even more history on this. Same time frame, everybody, end of February to the beginning of June, with almost 40 years worth of history, 39 years, with 87.2 win probability. Again, a lot lot of consistency there for almost 40 years. Good movement in the last few years. Some of you may or may not be familiar with the Spider. We've got its XLE on energy. I believe I've downloaded all data on this. Double check. Once again, this is the Energy Select Spider. It just encompasses all the energy. You can see that move. Just visually on the composite, you can see the other years in the background. If I snap this whole area, again, it's defaultly set at 91 days. I haven't changed it. Remember to change it back when you're snapping if you're looking at another security. Once again, it lights up red. Ask me if I care. That's a 100% move, 11 out of 11 years. It's just being dragged, the rating's being dragged down because of that denominator. Win percentage multiplied by average profit divided by the number of days. That gives me a lot of confidence that even the Spider runs all the way up, 11 out of 11 years. So why am I saying all of this? Again, going back to the Queen, when she puts her little recipe on the universe of stocks, guys, play with this. It's one thing that Pete taught me, to play with these numbers. But if you do, remember, change a couple of parameters. Know what you're changing. Otherwise, if you change too many, you won't know what the parameters were that created the different results, just like a recipe. Put too much in to change the recipe, well, heck, you don't know what created a better flavor or a worse flavor. So if you're going to do longer term, I like the 28 and 91, but you got to bring the rating down. Because if the rating is set at 4, it will never find this. Got to bring it down to 1. It's really what you're doing. These are calendar days. You're carving out a 1 to 3 month trade. And my suggestion is, I like all my users to look at 100% probability. Again, it depends on your risk tolerance. But I always, on a longer-term trade, I'm going to bring my profit up to a minimum of 10%. I want to see a big move over that 1 to 3 month period of time. I don't want a paltry move. I want the stock to move. And again, it would find this because this average profit was 12.8%. So those lists you guys can create. They're great lists. Again, my favorite is that volatility percent 6 months. Default settings of 14, 45, 4, 100% wins, 5% movement. I like to go down to 4 years of data. But like the disclaimer says, the lower the number of years, the higher the risk involved. Common sense. You got Apple that's done 11 out of 11 years during earnings season. We know that's a great repeating move. Versus Baidu, which right here is 4 out of 4. Well, we know Baidu is a great moving stock, but what has more statistical historical probability of repeating itself? Something that's happened 4 times or something that's happened 10 times? I'm willing to do it. I'm a little bit more of a risk taker. And so when I run my lists, I'm using 4 and 4. Again, if you're going to change these numbers, make sure they're equal. If you're going to do 5 and 5, 6 and 6, whatever the case may be, make sure they stay the same the way the software's done that. I don't know if I've got time. I've already, gosh, I don't know how much time I'm going to go. I'll probably end up going over, guys, but I hope you learn a lot. Yeah, I'm going to run it. I'm going to talk kind of along the way, too. Those energy plays were great. That ConocoPhillips and Chevron and the XLE, those were great, great moves. But we all know what happened in the Gulf. You know, there's only 2 events that can happen in the future, a known event or an unknown event. I like to call it a good event or a bad event. You know, and how Pete's taught us and how I try to teach everybody else. And so we limit our risk by buying cheap at or out-of-the-money options. We're risking very little. But an unknown event can happen. I mean, that spill is awful. And you look at RIG and you look at BP. I mean, you know, oil oil sector got crushed. So you got to know when to take your money off the table. A lot of that becomes a function of profit. Don't get greedy. Have a profit target in mind. My minimum return that I like to make on per trade is 50%. That's just my own personal preference. I'll take my money off the table if it's meandered for a while at 68, 78%. I don't care. At the end of the day, it's how much I put in my pocket versus transactional cost and, of course, paying our wonderful Uncle Sam. I'll go over some of the trading signals that I use to kind of to manage a trade and monitor a trade. One of the things I love to use is a 10-day exponential moving average on a 10-day hourly chart. And it's just amazing how price, if you're in a long trade, the call position will stay above that 10-day exponential moving average. And it'll continue the run. One of my triggers is that if that starts to bust through, my stochastics will move and my Williams percent R will start to dip down off the top, off the 20%. And those are, 3 triggers that are major red flags for me to tell me, hey, price is changing direction, time to get out. As you see, there's a bias, guys, towards longs versus shorts. But if you think about it over history, how many bull versus bear markets have we had? Well, we've had 9/11 and the financial meltdown. Everything else has been a bull market. Total of 515 trades. You can run all of those. So the king went out and killed. The queen peeled, sliced, and diced. Now let's look at what we're going to eat on a monthly basis. Find that list that's run, the last one. Sort it by month to month. I'm not going to go through a lot of the minutiae of the ways to save it and analyze this. Look at May. We're in May. 31 longs, 2 shorts. I'm going to kind of stop here and bounce a little bit. Well, maybe I'll continue with this progression of thought. You can click on any of the symbols when you're in the cycle trades. It'll automatically take you. Here, today's 15th. It'll automatically take you to the seasonal chart if you double-click it. It'll automatically, ooh, that doesn't look good. Something happened there. Let's maybe pick another one. Let's pick Amazon. There we go. Automatically will highlight and find that trade that the wizard found. Remember, the wizard is based on 7 very specific parameters on that universe of stocks and looking back into history and crunching the numbers. So I put a lot of faith and stock into what the Cycle Wizard found because these are all very specific parameters. I do like the rating, but the rating is 3 pieces of a formula. It is powerful. But I'm going to put more stock in that historical history on that trade. I'm always looking at percentage. Do I see consistency? I'm looking, what is that average percent move that I expect the stock to do? I'm always having my charts. I'll go back to program options. If I bounce a little bit, somebody yell at me. I'm bouncing over too much a little bit. I've got my short-term and long-term charts always defaulting to 6 months. Stan showed you how you can force the option exchange. I use 6 months because we've been in a trending market. 6 months is very indicative of a true trending of a stock. I do have show today's prices checked on the short-term chart. So whenever I see that trade and I go to my extreme charts, it's always defaulting to 6 months. And there's 5 things that I try to recognize immediately on these charts. Which way is price trending? What's the spread between the lower band and the upper band? I don't trade things that are under 10%. Does it have a good wave pattern? Is it going, how many times is it hitting its upper and lower extreme in the time frame that I'm looking at? More the merrier. Does it have long or short bars? Longer the better. It indicates intraday volatility. Last but not least, where the heck is that stock in its extreme percent of price movement? Now, if I'm looking at charts intraday, then Stan showed you how when you go to the short-term chart and you click on it, it'll automatically update and give you today's candlestick bar, and then you can go back to the extreme chart. You'll also add in that day's price bar. So then you're looking at accurate information of at what extreme percent is price moving at. There's 5 things you want to recognize immediately when you look at charts. It should almost become synonymous to blinking, breathing, or your heart beating. You don't consciously think about it. It becomes part of your autonomic system. Now, I can take a look at these charts and immediately tell you, do I like it or not like it, just by looking at it. Now, I defaultly look at things on a 6-month basis. But I'm also looking at shorter and longer term time frames. For example, one of the trades that everybody did that was extremely successful was ESI. And this is an earnings-related trade. Remember, the way the software works and the way Pete taught me, which just really changed my trading lifestyle and my whole way of viewing the world, is everything moves because of an event. Again, there's 2 events that happen in the future. Earnings is an event. Holidays are an event. Unknown things are an event that can, some stupid hedge fund trader pressing, B for $1 billion instead of T for 1,000, shorting Procter & Gamble is an unknown event, too, that can send the market reeling. But ESI was a phenomenal trade that we were all thinking about and talking about, Scott and Stan and I and Pete, way back in the early part of January. And part of trading is also thinking about the world around you. ESI is an educational company. They own ITT Technical Institute. And in January, the unemployment and jobless claims reports were horrible. And my mother's a professor at the University of Michigan. My father's a professor. So I'm real familiar with higher education. And I know that there's an event that always takes place, even when I'm going to be 6 feet under, every September and every January. New students come in. With students comes tuition. Tuition means dollars for the university. And that's a repeating event. It happens every September, every January. And in lieu of the fact that we're in a recession, there's a lot of unemployment, and all these people being laid off, perhaps they're going and getting retrained in a new education. And I know several people I talked to that some people were trying to apply for grad school, and it was completely filled. They couldn't even get in. That, coupled with the beautiful thing that Pete's mind originally designed with the software way back when, he was trying to overlay earnings on top of price to see that relationship in price and earnings consistency, and price growth and earnings growth, to see if it was a valuable company to invest in during Reaganomics, mind you, buy and hold. We have that ability to do it on our 3-line charts by simply going to all data. And you can overlay earnings on top of price by clicking the envelopes. And the first thing that I see is I'm looking at price and earnings consistency. My God, when you got a company that's screaming 80, 90% or higher, man, that tells me that is a strong company. They're making hand over fist of money. We call this railroad tracks. As a matter of fact, you even see a little bit of divergence between price and earnings. The earnings are starting to outpace price. That partly could be due to the economic meltdown right here. So that was another thing that I looked at. I said, wow, this company's screaming. And so in this area, we knew earnings were coming out. And we knew that people were tuition was coming in. We knew this was a strong historical company. One of my favorite spots to go to find out when earnings are coming out. I thought I had this URL saved. Hold on, I'm going to have to switch off of this for a second. Is briefing.com. It's just a site that I go to. There's a lot of places you can go. There's Yahoo, there's MSN, there's all sorts of. I just kind of hardwired my brain. I like this. All I have to do is type in a ticker symbol, hit enter on my keyboard, and immediately takes me to the next future event of when are earnings coming out. These guys are very, very accurate. I've never seen them to be wrong. Even when it says unconfirmed, I've never seen the dates change when it turns into confirmed. And I know, is this before market or after market? I know what the street estimate and Reuters are thinking. And I can look back kind of in history and say, gosh, they beat earnings, they beat earnings, they beat earnings, they beat earnings. I could see the company's making money. And that's just a quick, immediate snapshot. So we knew that earnings were going to be coming out. If I scroll this down, on the 21st. We know this information in advance, just like I know that earnings are coming out July 22nd. I know this information in advance. So we knew earnings were coming out then. Could see all these green dots and that composite spike up. I'm going to get rid of 2010 data, so I'll show you what we were looking at prior to this move. I'll snap this again based on a 14-day is fine when you snap this. That's what it's defaultly set at. 9 out of 9 years. Boy, some great growth here in these last 4 or 5 years. Good consistency, double digit. Love to see that. 18.9% move is what I historically expected that stock to do. I'm going to scroll this back to the day before earnings. Now, when I look at this chart, I go, yuck. Price is trending down. It looks like it's overbought, looking like it's going to retrace back down. And this is an important point to make, which is just part of what this whole training seminar is about, is a little bit more advanced stuff. You know, we love to see both these two tools line up. Linear regression is fantastic. You know, it really gives you that snapshot. And boy, it is accurate. When that thing is below down here or above down here, it really meanders. Unless you're using all sorts of other technical indicators, support, resistance, Bollinger's, Kelters, everything else, and you're just using this, you'd kind of say, well, geez, that's at the 78. Well, I'm sorry, I'm on the 4th. Let me go to the 21st. I know this was January. What am I doing? Hold on. There. Oh, it jumped. I guess I must have stopped it. It was at the 76.7 extreme. I could add in one more day, but bottom line, it was around 66.7%. Looked like pricing was trending down. Here's my point behind this. Which do you rely more heavily on? The linear regression line or the seasonal chart that tells you 9 out of 9 years this thing pops up? Furthermore, if you were using all the tools in the software and you looked at all data and overlaid earnings on top of data and you saw that kind of consistency, you rely on the seasonal chart. So if you look at 18, I should add in that one more day. Well, I have to add in all of it. Let's go back to this chart. Go back to the 19th. The stock closed at $96.16. We knew historically that we expect that stock to go up on average about 18.9%. So if I took $96.16 and multiplied that by 1.189, 18.9%, it gives me my target of where I could expect it historically to go to. Puts me right at $114.33. Well, the other thing I'm noticing here, the last time it was above the bands. If I look here, it's about 105 to about 114, 115. So I knew that that thing could retrace easily back up to there, especially since this was earnings related and all the other factors I said. So you could have picked between the 105 and 115s. One of my users literally came in. He had just funded his account a couple of days prior to this earnings trade. He tried to go live. He forgot to put his signature card in and called up his broker. And broker said, oh, well, can I fax it? He said, yeah. I said, how long will it take the account to get together? The opening said 24 to 40 hours. He goes, oh, shucks, I think I'm going to miss the CSI trade. So on the 20th at 2 o'clock in the afternoon, he actually went in to see if his account was live, and it turns out it was live. And he bought 100 contracts on this, and he bought the 115s. Anyways, I gotta kind of keep this pace going. Otherwise, I'm going to end up being until 7 o'clock. So you can see what happened, how we chose our strike price, and where we went to, or what we chose and what we rely more on, which is the seasonality of that move. I'm going to add the data back in. Go back to the 3-line. Move 1 day forward. Earnings were coming out the next day, and that's, of course, what happened. It gapped open to 110, and you can see the close price, 108, 107, 111, 113, 106. So it finally hit as high as $114.20, guys. It's pretty doggone accurate how you take that historical percent move, multiply it by the end-of-day price so you know what your target price is. All right, that was ESI, and that's how we analyze that. I also want to show you Netflix. It's another great home run for all of us. Once again, it is a earnings trade, earnings related. They had a huge move this year. That pop-up right there. Between 120 and 203. When did Netflix come out? NFLX. Netflix came out January 27th. $26, guys, overbought, oversold. Man, what a setup. What a beautiful looking setup. Price is screaming up. Great spread between the 10 and the 90. Way oversold, meandering sideways. Typically this happens before earnings too. It's consolidating. Sometimes there's a little sell-off right before earnings. What did we expect it historically to do? Well, let me snap this area. It wasn't 12.4 because this is including this year, so 120 to 23. Seven out of 7, great consistency, 11.2% move. Coming out after market on the 27th. Always remember, is it before or after market? That's real, real important. So the stock closed at $50.97. $50.97 times 1.11. Oops, I got too many. 1.12, 11.2%. Well, I guess I'd better add the stock price in first. $50.97. So Target's around 56 bucks. Where's the sweet spot? Like Pete taught us, between the mid and the high. It's a perfect setup, everybody. It was a perfect setup. So you could have looked at the 55s, or you could have stretched it for the 60s, all depending on the option price. And of course, what happened? Boom. Went all the way up and opened at $61. Ran up as high as $63.85. So either 55 or the 60s would have made you money. Let's look at Nike. Nike was a trade that I did in March. Again, earnings-related trade. It's only 80% win probability, but the setup was all perfect. All right. Let's go to the 15th. Here's an example, guys, of the opposite. You see, it's screaming upwards. Again, what are you going to rely on? You're going to rely more on the seasonality. All right, what I'd like to do is kind of walk you forward now back to these Mays that we just ran this list. And I'm going to name it the same thing as I did my master list. I don't need to put what that volatility percent is, but I'm going to call it my May calls and save it. Go to my user list, find it. Gosh, I got too many. I got to clean this thing out. All right, there it is. There's your master list, and there's your May calls carved out of your master list. My favorite sort condition is 6 months, extreme percent 6 months. There's a plethora of different conditions to be able to use, but the way I look at it is 6 months is a real good indication of price trending. Let the software do the work. Let it sort that list for me. When you first click that, of course, it's showing you everything at the top of the bands. Well, I don't want to see everything at the top of the bands. I want to see everything at the bottom of the band because this is a bullish list. And I know that every single one of these stocks within this list has, according to history, a 100% historical probability of going up sometime in the month of March or the month of May. The only question is, when's the best time to trade it? So I don't want to see everything at the top of the band. I want to see everything at the bottom of the band. If you click it again, it simply reverses the order of the list and shows you everything at the bottom of the band. And again, you look at 5 different things on this chart, which was price trending, good spread, and all the things we teach in our basics. Stock seems to be oversold right around the 13.4%. One of the first things I'm going to go to is open up the option chain. Now, before I do that, everybody please remember, don't drag your mouse across the chart because it's reading the different daily bars. Make sure you drag it off the chart up and over so that it's locking in that last daily bar and locking in that 10, 50, and 90% based on that last daily bar. This is a June expiration on this trade. Well, I mean, first, I guess, go to the seasonal on this thing so you see what it is. It's a 9 out of 9. It's a 100% winner. It's a great consistency. That's one of the things I look for. Especially, I'm looking over the last 5 years. I see that the price is continuing to go up. The percentages continue to go up. 9.9%. What kind of industry is that company in? Well, everybody should know that if you do, on tab 2, gives you a description of what that company is in. What sector are you playing? It's good to know. Well, they're in the major mining centers throughout the world for oil. They're oil-related. It's a mining company. And, of course, in tab 1, you can click link to description, and that immediately takes you to MSN Money. You can read all about the fundamentals of the company. The first things I like to do is click on key developments. Is there anything new news coming out that may adversely or positively affect me to make that trade or not? So I guess it just reaffirms guidance and they're going to make money. You know, I want to make sure there's no lawsuits or some crazy thing that's going to be happening that's going to be affecting my decision to make the trade. So remember to move your mouse off the chart. I know this is historically about a 9.9% move. I move it off the chart, up and over, and open up my option chain. I'm going to June month. First thing I'm looking at is open interest. I'm looking at where are people loading up. I'm also looking at volume. Open interest is how many people have contracts open overnight. Volume is how many people have contracts this last trading day. I'm looking at implied volatility. I don't like to see implied volatility this high. Remember, we like to go in with low implied volatility and have that volatility explode when we're in it and then take our money off the table. We don't like to have a high volatility going in. A lot of people will say, hey, I traded this thing and I bought the option. Stock went in my favor, but I lost money. Why? Well, that's called volatility crush. It means you came in, there was a lot of volatility, and then as the thing started to move, the volatility got sucked out of it like a balloon. Normally, I like to see this in the 40s, in the 30s. But each stock is a little bit different, so that's the next thing I look at is implied volatility. So I'm expecting a 9.9% move on this stock. Stock closed at $52.03 times 1.099, 9.9% move. Means my target's about 57, which is right past that 50%. It's in that sweet spot, which is what I love to see. Now, it'd be nice to have a 57 strike, but we don't have it. So I got to look at either the 55 or 60s. Little pricey for my book, $1.18. My rule of thumb is 1 to 3%. If I can get it cheap or greater, will I pay 3%? Yeah, if I feel the risk reward is there. Stock that closed at $52. Yeah, it's about a little bit more than 2%, 2.1% premium. It's not bad. 65 is too far of a stretch, even though it has hit up here. I really like to stay within that 90% of price movement. So what if that stock goes up $5 or $10? What if, you click the what if button, the stock goes up $5, $10 based on the strike price I choose? How much can I make? I like to see this number over 300%. This gives me an immediate snapshot incorporating Delta, one of the Greeks. Gives me an idea based on the strike price I choose, based on an immediate gap up of $10. If I bought this thing on Friday, $1.18, I woke up Monday morning, the thing gapped from at the money at 50 to 60, I'd make 350%. Great. I like to see that number over 300%. So does George Lee. One of the things I picked up from him. Well, as you see, this button defaultly is grayed out. But when I click on the actual strike price, it becomes operative. Price over time is a friendly way of talking about time decay or theta. When I click that, a chart pops up. I can raise it up. I can raise it down. I can move it over to the side so I can see it better. Just based on a $5, $10, $11, $12, $15 move, the red line is break even. On the bottom is days to expiration. This shows me what happens to my option based on a move. So if I'm expecting a $10 move, it doesn't happen for 20 days, well, I'm still making good money. And actually, this run, if you recall, when I snapped on the seasonal, lasted June 4th. It's a little less than 20 days. It's around here. So this shows me what happens with the option in the middle. If this thing absolutely collapsed hard, boy, it'd be an immediate alert for me to take my money off the table real quick. So this tells me what's going on in the middle. Cool. Well, what if it hits my target? Show targets. This is if you're buying the stock long. Just buy the stock, not trading the option. It's asking you to enter a stop loss. All you have to do is put something underneath the last trade price, 52. Now, my target, folks, is not what I expect historically it to move. My target is 90% of price movement. I'm hoping it's going to reach there. 63.07. This column now turns to profit. And this is giving me an ending snapshot. If I chose the 60s and I bought the June 60 calls for $1.18 on Friday, and I held it all the way to expiration Friday, which we're not going to do, but it's giving me an ending snapshot. And the stock closed at my target price of $63.07, which is 90% as of yesterday's potential movement, and it's been as high as 65, guys. Still make 160% of my money. So someplace between that 315 and $10 immediate gap up in there, could I make 225%? Yeah. So the what if gives me an immediate snapshot based on the dollar movement, what I could make. The price over time chart shows me what happens in the middle. The show targets shows me what happens in an ending snapshot. These are the three tools built in for analysis on analyzing an option. Is it worth it for us to make this trade? Okay. Well, if I like the whole setup, the only next thing I'm waiting for is when is price now finally going to be moving in my direction? A lot of times we buy it and it just continues to go down, and we could have bought it for a hell of a lot cheaper. Or, we buy it and it continues to go up if we're buying a put. Well, in Best Choice, you have chart indicators you can set up. I'm going to show you some of my favorite indicators. These are all the indicators you can set up. These are all my favorite indicators that I like to use in Best Choice's tool as a timing tool for a setup. Now remember, what you're looking at is daily charts. And daily charts, a lot of times price can move very, very fast in one day. Apple and Baidu and Google and everybody else. I have Bollinger Bands on this. I have a 10-day exponential moving average, a 20 simple, 50 simple, and 200. This is defaultly, actually, what the software comes with. And that's good because the 10-20 crossover is a George Lee technique. I also have the MACD set up at the default, what the system puts in. I have stochastics. I've changed the colors and the background colors to have things jump out at me better. I have a Williams percent hour, and of course I have daily volume. What I look for in this sequence of events is stochastics will always move first, they're leading indicators, followed by a MACD crossover, followed by a percent R pulling up below the 75. I'd like to see it cross the 50. Followed finally by my red line, which is the 10 EMA, crossing my blue line. For example, you can see there's a trigger right here. This is a perfect trigger. As a matter of fact, if I put my cursor on that candle right here, I'm hoping it'll say bullish engulfing. No, it doesn't. Not quite a bullish engulfing candle. I do recommend, guys, if you learn some candlesticks, it's very powerful because this is built into our software, and it's phenomenal. And recognize these patterns, a bullish engulfing, a bearish engulfing, a Morningstar, Evistar, all that stuff. Nissan is the one that brought it. You can go to his website, Google him. Bigelow's another guy. There's a lot of, those are the two best, in my opinion, that are out there. But learn them because it gives you the same information as a daily bar, but the difference is it gives you the pulse and emotion of the market. And the market moves emotionally, not logically. So, but bottom line, here's the setup. You can see the stochastics moved first, followed by percent R that popped up, followed by crossover of the MACD, followed by my final trigger, the red line, crossing the blue line. And this could have been a bullish trade, riding it on up, as long as it was confirmed on seasonality. but those is how you can use the best choice setup. However, since this is a daily chart, I like to go to things that are a little bit tighter in time frame. And that's where I'm going to go to my toss charts.
Gary.
Yep.
Hey, Stan.
Yes.
Hey, since we're obviously going to run a little bit long, which is fine with me, and we had originally planned on a 10-minute break that only took 5, before you go to toss, you want to give everybody another 5-minute break to, because I'm sure there's some teeth floating out there right now. Give everybody another 5-minute break before you move on to toss.
Just type in a quick, whatever on a question, yes, no, or do you want me to continue, or do you want to take a quick 5-minute break?
Yeah, here,
somebody type in something.
I'll open up the questions here and read them for you. I've got yes, break, keep going, continue.
Rock on, yes, no, yes, no.
Break, continue,
break, yes, break. Well, looks like.
All right, I'll tell you what, let's take a 3-minute break. How about that?
All right, give me a chance to go get a shot.
Just enough time to get to the restroom and get back.
Well, give me a chance to get a shot at JD, clear my voice.
Yeah.
Okay. We'll take a quick 3-minute break, and I'll be right back.
All right, 3 minutes.
All right. All right, everybody, I'm back. I feel nice and loose now. That shot of JD was good. All right, is everybody back? Yes, yes, quick, yes, yes, continue. Okay, all right. All right, these are my toss setups. I like a 10-day hourly. My this is your duration. This is your frequency. I have a 10 EMA. Same thing that I have on Best Choice. And if you look at the color scheme, everybody, you see how it's almost identical to what I have with Best Choice? Right? The color schemes, I've got a red EMA, I got a blue 20 SMA, a green 50. One of the things I learned is that your mind gets hardwired in looking at charts. And you start to recognize things, and you have it's called a blink method. I think there's a book called Blink by Griffith out there. It's a great book to read. And you start to hardwire your brain. So whatever chart colors you guys decide to put up, keep it the same when you transfer it to toss. And we can do that same color scheme from Best Choice to Thinkorswim. Sorry, I'll say toss. That stands for Thinkorswim. All right, I use a 10-20. It's a George Lee technique. This is, again, on Joy Global that we're looking at and analyzing right now. I do have a 178 EMA. It's my preference. Remember, an EMA looks back. Like on a 10, it looks back over the last 4 days and compresses price and gives you a little bit more accurate information than what an MA does, and that's what I prefer. But here's an example, guys, where you can see where a price does not really, it hovers around that. But when it breaks it, it stays above it. And that's one of my triggers to stay in a trade or out of a trade. Now you can start to see a setup here based on the last hourly candle for Joy Global. Fast stochastic, slow stochastic. Fast will always be first before slow. Leading indicators, they're herky-jerky. I only use this for entrances. I don't use it when I'm monitoring a trade because it's all over the place. But I have a fast Stokes crossover. I got a slow start to pull up. I got a Williams percent R start to pull up above the 75. I'd like to see across the 50. I got a collapsing MACD. I need to see that MACD positive. Very, very powerful. Moving average convergence divergence is a very, very powerful indicator. And my final is going to be that red line crossing the blue line. That's simply on a tighter time frame. Now, do I need to have all 4 of these indicators line up? No. But I need to have 3 of them. Stokes usually will go. MACD will go. Percent R sometimes is more of a lagging indicator. It's set at a 20 length, everybody. Now, one of the other things I will do is I also, there was one of my users who traded the FAZ and FAS like $20,000 a day. The guy studied over 400 moving averages. The guy was a really, really smart guy. And I'm a student of Fibonacci, and I love Fibonacci. And he showed me, and again, a lot of people use a 2.4, there's a 4.8, there's all sorts of different crossover indicators. I like, my personal preference is a 5.13. Just look at this area right here. This is on the 10th, right? Because this is a setup, you could see this was a setup to go long in this thing. Not that necessarily that's when you were going to do it. I'm just showing you the setup, where you had your Stokes cross here, your fast, then your slow, your percent R popped up, you got a positive MACD, and then you got the red line crossing. But you wouldn't have been able to get in until this day. Watch this area here when I switch it to a 5.13. Allowed me to get in the day before. It just reacts a little bit quicker. And you know what? I would have rather paid that option price than that option price. So I found that 5.13 to be very, very good, because sometimes on a Friday, you know, the 5.13 will give me a trigger to come in maybe in the last couple of hours of market. And then Monday I wake up and the doggone stock explodes, and then my 1020 crosses over. So I prefer to have the 513. How do I set these up? For those of you who are not familiar with Thinkorswim, it's under the Charts tab. You know, Thinkorswim has got phenomenal tools. Folks, I highly recommend you can open up a paper account with them. It's free. It doesn't cost you. And all these tools are available, but make sure you download their desktop version, not the web-based. You can go to Thinkorswim, and on the top menu bar, under Software, there'll be a drop-down, and the first item under the drop-down is a Desktop Think Desktop. That's the version you want to load, because it can be 24/7 running, whereas the web-based, if you don't do anything, you're inactive for 20 minutes, at least last time I checked, you get timed out. So I prefer the web-based. The web-based has a heck of a lot more tools for analysis, which is really cool. All right, and that'll be for a future time. There's a whole analysis tabs of simulating trade, risk profile, probability. These are phenomenal tools for risk reward to make a determination of your risk reward and analyzing where your profit target and so forth can be. Right now I'm just going to show you profits. You go to Studies. Apply Studies. You click that. A window will pop up. Here's all the wonderful studies that you can add. You know, flying moon over cow stuff and dark cloud with breaking bottom. I mean, all sorts of great stuff. There are standard things in the industry that most traders use, crossing averages, Bollingers, those kind of things. You know, to do the moving averages, it's under the M's for moving averages. There's your moving average exponential. You simply double-click it. It moves it over to here. It's always defaultly at 30 length. To edit it, you click Edit Study. Change the period to either 10, or if you guys want to use the 5. Again, keep your color scheme the same. Whatever the colors are going to be. I've just hardwired my brain, red line across the blue line on the black background, it jumps out at me. You click this, color chart pops up. You can change the colors. There's a color swatch. Just click red. I like the opacity to be, because I'm a little bit older and my eyes aren't that great. I like the opacity to be as bright as possible. I change the weight, second from the top, so it jumps out a little bit more. It's a little bit thicker. You can see this is it right here. You can see it in the background. This is it right here. So if I change the weight to the third down, you see how it's thicker? Matches that. Mine is, the way I like it, is the second from the bottom. And then, of course, make sure the pattern is solid, not dotted. Okay? So that's how you edit a particular strategy. Keep it at the close. There's other things, high, low, open. Just keep it at the close of price. And then simply click OK, and then it'll change that. Now I can delete that by simply clicking Delete Study, and it's gone. So then I'll go on to the simple moving average, double-click that. Again, it pops up. Defaultly, it's at 30. It's highlighted. Click Edit Study. Change the period. This would be then to a 20, because this is an SMA. This is a simple moving average, SMA. I'm going to change my color scheme to, I think it's that blue. Yeah, that blue. There it is. change my weight, second from the bottom. My pattern's good. Click OK. Click OK. There it is. It happens to be the exact same one because I've already got it up here. And you'll do that for the rest. You'll do another one. You'll double-click to add a 50. You'll double-click and change it to you got two. You got a 50 and a 20. And I like the 178 EMA. All right, your MACD. It's under M's for MACD. Same thing. I like MACD histogram, not MACD histogram with a breakout signal. MACD histogram. I have it set at 817.9. Stochastics. You scroll down to the S's, and that's where you'll find slow stochastic. Unfortunately, the F's, they put it alphabetically. Think of that smart move. So you double-click this, and that pops that up. Again, edit study. I've got the fast K and D both set default to 10. It's fine. I've changed the color schemes because you see when you first open it up, it's white and red. I've used this blue and green only because it opens it up. It jumps out at me. Once again, you can click the color, change the width, the pattern, the same thing. This is just a color scheme that I've hardwired my brain on. So the fast is under the F's. Oops. Where is that one? Do I got two fasts on here now? No, I don't. Oh, I need to get rid of this pane. Okay. Oh, I got rid of Williams percent R is what I did. Ha! Okay. All right, so now I got to put in Williams percent R. How about that? Take it all the way down. There's your Williams percent R. Double-click it. Defaultly, it opens up to a 10 length. Click Edit Study. Change the bar length to 20. I keep it white. And click OK. Now you want to save the study set. So you click Save Study Set. Name that study set. As you see, I have 3 different study sets. I have an EMA 4, MA8, EMA 10, MA20, EMA 513. Sometimes I'll play around with those. I don't use that much anymore. Scott, I love you, but I don't use that much anymore. Something Scott showed me. Okay, I think you guys get the gist of that. You got to save that. And then once you name it, then simply click OK, and you'll exit out of that. And then you can find all of your studies under Studies, under your study sets. I can flip from the 10, showing me my 10 crossover, to a 5, showing me my 5 crossover. Now, one of the things I like to do, because again, my eyes aren't that great, I like to snap a red line right at the 50 of the Williams percent R, so it's just more visual for me to be able to see, is it crossing, is it popping up. The way you do that is under Drawing Tools, and you're snapping a horizontal price line. This turns into an X. Simply take it, left-click, hold, and drag it on over. Now, it's not going to be green, guys. I've changed the color. Let go, and put your cursor right on it, and right-click it. I like to extend it so it goes all the way out. You can delete the drawing by clicking that. But now I can just visually see then when this thing crosses, when it crosses, when it's getting close up to there. That's just a little technique that I like to use. So these are the setups. So Joy Global looks like, you see how it's popped up above that 5 now? I think, yeah, I got a 513. So we'll see what happens Monday. If we get another bad turnout on the market, well, who knows? But, you know, about 5% of the, remember, it's not a stock market, it's a market of stocks. There's always a bull market someplace. Well, normally I'm interacting with my users, and I would say, are there any questions? And I'm sure there are. Trying to look at a trade that I recently did. This was a good trade. BBY. Everybody knows what BBY is? Best Buy, right? And it was a nice seasonal short right here. I think I still have this set at 14, yeah. Matter of fact, this may be saved. Nope, it's not, because I think it's not a, didn't fit the criteria, because the rating. See how the rating, it would never find this trade, everybody, if under your cycle wizard, the rating is always set at 4. It would have never found this trade on Best Buy. And I made a killing on this thing, an absolute killing. It was a great, great trade, and it was a good setup. 427 to 513, that's your window of opportunity. Remember, not a black box, but a high probability window of opportunity, crunching all of the numbers for 11 years. But remember, maybe this year it'll start a little early. Maybe it'll be on time. Maybe it'll be a little late. Maybe it won't happen at all. But it's a high probability window of opportunity. So I'm always telling all my users, start looking at things a little bit early, just in case this year the move may happen earlier. How can you know that? Well, click on any one of these years. It'll highlight the year, and you can see when that move happened. And the dates changes up here. That was right there, April 24th. That's when you could have got in. You could have got in right there as well, May 1st. But heck, I'd rather get in here than here. So if I was watching a little bit earlier, I'd rather pay that price than that price. I'm sorry, this is a short. Sorry, short happened right here, May 10th. Down to here. Somebody's got to hit me. The JD's getting in my head. Right down to here. So this happened way late. Here's an example where it moved later. When did it happen here? Right there. May 7th. Again, a little bit later. This year? Well, this year it happened right about there. There's April 22nd. It's about, what, 5 days before the start date, where it gave you the average crunch numbers. So that's how you can look at any individual year and verify that from year to year, there's, again, this is averaging it. It's giving you that high probability window of opportunity. So everybody, start looking at things just a little bit earlier, a week or so. You know, sometimes we find things a week early, a week late. It just depends on the ebb and flow of the market. Okay. Was this earnings related? I don't remember. BBY. No, May. No, this was not earnings related. What was I looking at? I bought this thing on May the 4th. Ooh, I think you guys can see what I played already. Yeah. See, it's already starting to come down, sitting at the 78.8 extreme. I'm not crazy about this pattern, everybody, right? I mean, look how many times it's gone from one extreme to the other. 1, 2 in a 6-month period of time. Not that great. See how it looks like on a shorter time frame. And please, guys, everybody, look at different time frames. The more time frames you can confirm that a particular underlying security is either overbought or oversold, the better. Let's go back to the day I came in, the 4th. Well, that chart stinks. See, it's picking up. What is it picking up? It's picking up this right here. So it's looking like it's It's, overbought and coming, or oversold already and coming back down. So, all right. Fourth. Let's see. What was I looking at? I bought, here's another important thing to remember that Pete taught me. When things are really, really overbought or really, really oversold, there's what's called a leashing effect. It was very popular in the bond business and the mortgage business. They used to use the 25-day moving average, and price would, kind of like walking a dog on one of those leashes, where the dog kind of meanders out and goes to the end of the leash, and then boom, you tug it, you pull it back in. That's kind of what price does. And it will always kind of meander outside of either Bollinger Bands or a particular moving average, and then it'll pull back to the mean. So when a stock is really, really overbought, it'll typically come back down to the mean, or 50% of price movement, or thereabouts. Nothing's inexact. I'm looking at my chart here, and I picked the May 42s. Let's do a think back on this. I was going to show you the ESI trade too. But let's do BBY. This is another great analysis tool with Thinkorswim. It allows you to look back and literally see, hey, could I have made money or lost money? And it helps in your educational process too. I bought, let's move this forward to May the 4th. Okay, you guys see the setup? Again, what was I looking at? I saw this. This was on my radar. It was a strong probability move. Oh, you know what I should do? Let me remove this data, 427 to 513. Okay. So this is actually what I was looking at. There. 90% win probability. That's what it was. Not a big move, guys, 4.6. But you know what? You can still make really good money if the stock moves fast and you can buy a cheap option. It's the whole name of the game. All right, so I had about a 4.6% average movement. Again, I was looking at pretty good consistency. Didn't like that year. But you know what? That was way back in 2000. Best Buy is, weathered the storm of our financial meltdown, and Circuit City's gone. And so, anyways. .6% move, right? No. Why am I? Oh, I removed all the data. That's why. All right, let me load it back in. All right. Take out my trusty calculator. Stock closed at $44.55, right? 44.55. Now, 4.6 is what I expected the stock to go. You can't multiply it by one something. You have to subtract 4.6 away from the stock price. So that had to be multiplied by 0.954. I expected the stock to retrace to about 42 bucks. Again, right to the mean, like the leashing effect. So let's go back to the think back. Look at May. The May 42s. Cheap or expensive, guys? It's pretty cheap, isn't it? I actually paid a little bit more than that, so it actually retraced a little bit more. Let's buy that, but I will I will put in what I actually paid for it. I paid 59 cents is what I paid on the 4th. We'll just buy 10 contracts. You just spent $590 is what you spent. And remember, everybody has their own personal preference on money management. My personal preference is I want to make at least 50% per trade. I have two trains of thoughts. One is that I will put 50% of my trading capital on the market. The other is, you know what? My capital for trading is my capital for trading. If I blow up the account, well, the whole reason of trading is to make money. It's kind of like going to Vegas. If I'm going to Vegas with $1,000, well, I'm going there to spend $1,000. That's my risk capital. That's not going to materially adversely affect my life one way or the other. So the other train of thought in money management is the old floor trader. Take whatever your capital is, divide it up into 20%, and never have more than 20% into any one particular trade. The other train of thought is, take 50% of your capital and put it on the market, have 50% in cash. And out of that 50% that you have in the market, do not put more than, 20% into any one particular trade. That way, if the law of probabilities catches up with you, which they can, and you get wiped out, well, guess what? You still got 50% of your capital after you lick your wounds and you get your mind straight to go back into the market and play the game again. All right, I exited on 5-6. We're going to walk this forward here, and here's the profit. There's 5-5, 5-6. That 59-cent option, I actually sold for $3.15 on this day. It retraced hard in that day. But it ran up and then came back down. And you can see that based on what happened here. There's 5-4, 5-5, 5-6. Do you see what it did? Opened here, tanked all the way down to there, and then came back up. Well, guess where I sold it? Right down in here. And when I am in a trade and it's really making money, guys, I'm going to my charts. I have linear regression put on this in a MACD. My time frame is 2 days, 10 minutes when I'm monitoring a trade. Now, I've got Heiken Ashi on here as candles because it smooths things out. It's like I did a short on Baidu yesterday. Saw it was way overbought. But I'll take a 10-day, 10-minute, and then blow it up. See, I bought it right here. See, this is, again, you can see this, guys. See the red line crossing the blue? Again, that's a 10 crossing a 20. Linear regression lines, same thing. TOS has those. We've got them here as well. The problem was when Baidu split, this is what our until the data's caught up like this, you can't see this. So I had to go to the TOS charts on a shorter time frame to monitor. Saw the crossover, and this is the short that I was playing. Well, shame on me. Friday I was training a lot of people. I should have got out when I saw the crossover of the MACD and the crossover of the 10 over the 20. But this is a shorter time frame, guys. This is on a 10-day, 10-minute. If you go to a 10-day hour, it hasn't crossed yet, has it? Damn close. Damn close. Getting scary. But I got a 70 on this thing, and I expect it to hopefully tank further down. So in monitoring a trade, I'm going to go to a tighter time frame. What I like to use, I guess I should stay on. See, they have so much great charting on Thinkorswim, guys. You really need to take advantage of this. They've got all sorts of classes and tutorials on this stuff. We've got a great relationship with them. But when I'm looking to, and you can see here, look at guys, you see how price just never busts through that 10-day exponential? That's what I'm talking about to monitor a trade, that and a MACD. These are two very simple indicators, and they work. They really do work. It crosses, and again, I've changed the candles to what's called Heikin Ashi, which just gets rid of the up, the up, down, up, down. If it's negative, it's negative. If it's positive, it's positive. So that's, and you can do that when you do your, under style, under settings, under appearance, you can change your chart type. Most of the time, everybody uses candle. I like Heikin Ashi because it smooths things out. So that's again, I want to show you my managing, and then what I look for exiting. And I'll use both charts and profit to do that.
Gary?
Yeah.
Will you go back over real quick what are leading indicators and lagging indicators?
Sure. Okay. Stochastics are always leading indicators. They will always move before price. Williams is slightly lagging. In other words, these are the steps. Fast stochastic goes first, followed by slow, followed by %R, followed by MACD, and the last thing that's going to move is your moving averages, guys, because they won't move until price moves. And if you're going to use the 1020, it is stronger confirmation because it's a longer time frame. It's using a 10-day. And it is stronger. Now, one of the things, guys, that's very, 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 very important, I've taken you from, I think we're still on Joy, weren't we? I've taken you from, this is what we just ran, by the way, everybody. This is volatility percent 6 months. You guys can all do this. You guys can all find these trades sorted by extreme percent 6 months. There's Joy Global right there on the chart. And what do you guys, let me stop back here for a second. I'm going to retrace it. What does everybody see right here? Ah, earnings. You think we may not want to go to briefing to find out when earnings are coming out? You betcha. When is earnings coming out? JOYG. Ah, coming out June 3rd before market. Cool. Now, one of the other sites I like, and again, there's lots of this. I don't put a lot of stock in the talking heads, but, you can find out some of the whispers that are out there. See what some analyst opinion are on this. I got 9 analysts out of what, 16 out of 17 saying a strong buy with a target of about 72. Cool. So, when was earnings coming out? June 3rd before market. Before market. You think you want a position before that? You bet. So, going off on a rabbit trail here. Somebody focus me again. Indicators. That's what I was talking about. We've got the indicators here. See, we got Stokes that have pulled up. Williams are kind of lagged. They kind of retraced a little bit. Of course, we've had 2 nasty days in the market, haven't we? So we've already had movement here. Stochastics will always move first because they are leading indicators. You're going to follow by the Williams, followed by a MACD, and you can use that in a tighter time frame on a 10-day hourly. But going back to what I wanted to talk about is whatever chart you're going to look at to make your final decision should be the last chart you look at. It's preached in a lot of books, Alexander Elder and Mastering the Trade or Trading for a Living, I forgot what it was. Always look at a macro picture. In other words, A 50 or a 178 EMAs, they don't do me any good on a 10-day, 60-minute. But if I go to a 1 year, it's a whole different picture, isn't it? Now I see, look, I had a 50 cross the 178 way, way back here in July, and it's kept rocking and rolling up. It's still above that. I've got a 20 that crossed the 50. Of course, I had a 20 that crossed the 50 here, too. But again, when you've got longer-term moving averages, you got to take a longer-term snapshot. Which way is price trending? Go to a 6-month. And then finally break it down to a 10-day, 60-minute. It's a real good duration and frequency to pull your triggers. Again, this is just timing your entrance. Best choice is your setup. Best choice will give you it's the classic formula, DDSTS. It'll give you the direction a stock is going to move. And you got to know with some certainty what's up ahead of you. You know, like Pete loves to say about technical analysis, like driving a car looking in the rearview mirror. Well, eventually you're going to run into something. You better know with some kind of modicum of probability what's up ahead of you. That's where our software comes in. It's telling me what to expect historically the stock to move. The duration of the move, the average percent of the move. S for strike. I know what strike I need to choose. Right? I mean, this thing, we're looking at a 9.9%. We already did the entire math on this. Opening up the option chain, June expiration, look at open interest, look at volume, look at implied volatility, see is that a cheaper, expensive option. If you can't figure out the math in your head, it's real simple. Take out a calculator, take that ask price of $1.18 and divide it into the last close price of 52.03. That tells you what premium you're paying. It's 2.2% premium. That's pretty good. Would I like it cheaper? Yeah. Am I willing to pay that? Well, as long as the risk reward is there. How do I determine risk reward? What if the stock moves up $5, $10? What if? That's where you click the what if. Based on your strike price. What if it moves up $10 on an immediate gap up? Immediate only, guys. Remember, 315%. Cool. Well, what if it doesn't move up right away? How is time decay and theta going to affect it? Is it going to crash hard real quick? Or, what, if it gaps up 10, geez. I'm not losing a lot of money now. Am I going to take my money off the table? You bet. This tells me what happens in the middle. Show targets gives you the ending snapshots. If you're buying the stock long, just put some price underneath the last close price and then enter your target price. I like to use that high. Again, I didn't open this up right. It's reading a different bar because that said 6307 originally. I know that was the last high. And this gives me the ending snapshot that if I chose the 60, bought it on Friday, held it all the way to expiration Friday, it hit my target of $63.07, which is 90% of price movement, how much am I going to make? So you got beginning. So this gives you all the setup. Without this, you can't do it, anything else other than rely on technical analysis. But I simply like to refine my entrances. Looking at this, these are the tools. They're set up. But once I see something, I want to go to a tighter time frame, a 10-day, 60 minutes. What moves first? Fast stochastic. Second, slow stochastic. Third, percent R. Next, MACD. Last but not least, red line crossing the blue line, 10 crossing the 20, which is a stronger indication indicative of price movement. You can see on Baidu in the trade that I did. Of course, I got candlestick patterns built in. If I put my cursor over that, dark cloud cover, love it. That's exactly what happened. Here's the perfect setup, guys. You see it? Stokes crushed here. Fast went first, followed by slow, followed by Williams R coming down. We already had a collapsing MAC. It finally hit here, right? What's the last thing? 10, crossing the 20. You can just look up at the chart. You can see it right there. And you see price is not closed and bounced above it. And I already showed you that on charts on Baidu. Same thing. I just threw in the linear regression lines and a MACD. And that's how you monitor a trade. If you're really getting anxious, go to a tighter time frame. Go from a 10-day hourly, go down to a 2-day 10-minute. And if you do this, you're going to say, well, Gary, why didn't you get out? Yeah, probably should have when this happened right here. That's okay. Still up about 23%. All right. You want me to go over another trade that I did? Give me some comments. Yes, no, yes, no, yes, no.
Gary, you got, can we wrap it up in the next 10 minutes or so? Only
Okay,
thing I'm
does anybody
concerned
want
about
to see
is,
another trade, yes or no?
yeah, let's see one more trade,
Yes.
and then we'll wrap it up so we don't go too long on this recording here.
Okay, all right, okay, all right. Oh, yeah, my favorite, Apple. That was a great trade. Wonderful Apple. Great company. Steve Jobs, you've done a great job. Let's see. 420 I came in, exited on 421. What was I looking at? Oh, I wonder what that was related to. Okay. Well, I've got 2010 data. I came in 420, got out 421. Let's get rid of that. I'm only going to get rid of 2 days. Jeez, oh, Pete, that was a quick play. Okay, well, it's still showing the statistics. I don't want to show it. 417 to 45. That's what I got to do. Sorry. Make it quick, guys. 5-5. All right, what was I looking at? Earnings play, right? Boom, gaps up. About a 10.6% move. What was I looking at on the linear regression lines? Boy, how do you like that? You know how many people shorted it on that day? They all have to give their money back. Oh, I got to add the data back in. Okay, overbought, oversold, everybody. Duh, it's an easy one, right? Sitting to 90.9% extreme. What did I buy? I bought. What did I buy? By the 220s, I think, is what I bought. Yeah, I must have wrote this down wrong. I bought the 220s. I think I bought the 220s at 420. Yeah, the puts is what I bought. Let's take a look at that. April 20th. I bought the, I believe I bought, yeah, I bought the 220s is what I bought for, yeah, the 220s. I wrote down 420, that's why I'm saying it's crazy. All right, I think I got out the, well, according to my notes I did. Oh, that didn't work right, did it? I must have wrote down my notes wrong here on this, guys. I think I mixed up some trades. Let's look at another one. I had wrote these all down late last night. I have another one that I can show you that was ILMN. You can see this in this was a call that I did, earnings related. You can see I have different ending dates. It means I ran different lists on this thing. 10 out of 10. Again, I'm looking for that consistency in historical movement. And I came in on this on 4/19. Okay. Doesn't look that great on 4/19, right? 28.8%. What does it look like on a shorter time frame? 3 months. Whole different picture, isn't it, guys? Remember to look at different time frames. You're not form fitting. It's just finding a trending of the price. Don't forget you also have an auto feature that came out in the 4.6. And again, Stan has a little bit different setting than what I do. Defaultly, I think it's 44 days shortest and 90 days longest. Those are calendar days, meaning it's looking back over the last 44 calendar days to 90 calendar days, looking for the best trending of price. I don't use it that much. See, because that's what it's finding. Well, let's go back to the auto is finding that. Let's go back to the 19th. Oh, still find the same thing. There. That's on an auto versus 6 months. It's definitely oversold. If you use a 3 month and you don't want to go through that auto feature and do exactly what I just did, it's still showing oversold. What did I buy? I bought the 40s right there. Again, I do not go beyond the 90% of price movement. What do I expect it historically to do? This is including this year. It's about 11%. Stock closed at 37.35 times 1.11. Well, there it is, $41.42. I don't remember if this was in dollar increments or not. I think it was. No, it was $5 increments. So I picked the 40. Again, this is showing in May. Let's walk it forward. I paid 95 cents. A little pricey, huh? For stock that closed at what? 37? Under my 3% rule, though. And I sold this on 5.3. Let's walk it forward. 1, 2, let's go to 5.3. Holy Toledo, that was a nice day. Oh, duh, that was earnings. That's why. Again, when did ILMN come out? ILMN.
Gary.
Yeah, got to wrap it up. Getting too long.
Voice of the presenter here. Yeah, I think we should wrap it up.
Okay, hold on. Let me just finish this.
Finish this up.
All right. This says the 4th. What day is that? 27th. That's inaccurate. That's when earnings came out, guys. Okay, and then I sold it on 5.3. There you go. Started to retrace. Bought it for 95 cents, sold it for 2.45. But you see the setup, guys? Now, let me just do one thing, Stan, so people can see my triggers on this thing. It was a great setup with Best Choice. I mean, great historical, great seasonal. The stars were aligned on this thing. You know, and it was earnings related. Again, an event. It's what we look for. Buy a cheap out of the money option, 1 to 3%. Look for an explosive move, short period of time. Great historical volatility. This stock had it all. Let's go to the 19th. On ILMN. Oops. Let's give it a little bit more days, keeping the same time frame. 60 minutes. Let's blow it up. You can't see it. Well, I came in a lot earlier on this than I should go back a little bit further. But you could see if you wanted to come in the day of the day before earnings. That's a lot of the times the kind of trades we do. I don't know if you guys can see this very good. There, maybe you can see that better. Here's a setup. You could come in the day before earnings. I just happened to position myself earlier. Fast stochastics move first, followed by slow, followed by %R, followed by MACD, and you got a crossover right here, the red line crossing the blue. That would refine your entrance. Now, a lot of times on earnings trades, I really don't go to indicators. This is just positioning myself prior to earnings and taking a quick pop and taking your money off the table. I got like 2 more, but I know I don't have the time. I could keep going and going. Guys, I hope this was helpful. I hope you've learned a lot on some of the techniques that I use. Remember, best choice is your setup tool, the best hammer you'll ever spend your money on. It works. There's a lot of people I've trained that have made a lot of money with this. Like that one trade, ConocoPhillips, guys. I had a gentleman make this trade, never traded options before in his life.
Okay, I'm cutting you off.
You're going to cut me off.
You're starting on another one.
All right, I'm going to go on another tangent here.
I'm going to take this back, and we're going to wrap it up because I got to stop this recording, or we may end up
not being able to record the DVD. Hopefully it was good, guys. I hope you liked it. Feel free to reach out to me, email me, whatever questions. I'll try to get back with you. And
oh, Gary, you're going to have to change presenter here.
Oh, I got to train. Okay.
Change presenter.
Stan, go for a walk. Somebody said, Gary. Stan, go take a walk. Oh, did you get it?
No, I haven't got it.
All right, hold on. How do I change presenter here? Forgot where I go. Oh, give keyboard and mouse.
Open up your control panel.
Yeah, I got it open. Change presenter. Oh, Stan Jones. Okay.
There we go. Okay, guys, we're going to wind it down. I would apologize for going long, but I think it was all great information. And just to let you know, I don't think I've ever heard Gary talk such a short time. So we knew we'd probably go over because he had a lot of information to cover, and Gary does like to talk. Anyway, let me see if I've got this option now. I was going to try and save these questions. Well, oh, there it is. Save question log. Okay. I'm going to go ahead and save the questions. And I'm going to stop the recording, and then I'll talk a little bit afterwards about getting the DVD.